love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. Hope you're doing well and happy Tuesday to you. We've got retail sales here this morning, and we are counting down the hours to the Fed meeting, which is, of course, probably the highlight event of this week, but certainly some interesting moves to discuss as we get started. Good morning to everybody in the chat. Thank you for being here. By the way, as we get started, just let me know, just comment in the chat here where you're tuning in from. We've got stocks slightly lower here this morning, just by a little bit. You've got SP500, NAS, and Dow Jones, as well as the Russell, all slightly in the red. VIX is up about 2.8% here today. So little bit of volatility creeping in here to this market ahead of the Fed meeting. You've got gold and silver down again. Can't seem to catch a break here. Gold, let's take a look at the daily chart. So gold is down 0.3% here today. Silver's down 0.7%. So a bit of a lackluster week here for metals, to say the least. Kind of back and forth. Northern Ireland, Manchester, South Africa, India, Albania, Austria, all sorts of places. New York City. Awesome. Good to have everybody here. And as we get started, if you could do me just a big favor, hit the thumbs up button on the stream. It does just help to support. You guys know the YouTube algorithm stuff. Greatly appreciated. Poland, RSA, Zimbabwe. Very cool. Little bit of everywhere. Netherlands as well. Australia. And we got a diverse list of countries here today. Anyways, guys, let's jump into some analysis here. A couple things that I'm watching. I'm watching indices as always. I do have a GDX position, which is the gold miners ETF, which is not going so hot. I sold puts on this one, but with gold prices kind of taking a little bit of a push lower here. Recently, it's dragging down GDX. So just going to kind of monitor that one. But gold to me is one of those things. I would either like one of two things for gold right now. If you get gold prices starting to make a really nice breakout, a breakout pullback momentum play, I like that a lot. If we get, for example, let's say that we get like a really dovish sounding Powell this week, right? So Powell is going to be speaking tomorrow. Let's say that we get guidance for, more rate cuts than expected. Sorry, guys, I'm tired. I've been explaining recently that I've just moved into this new house that I bought with my wife and I. We've just been up late, up early every day, just working on unpacking stuff. So we're here for the holidays though, which is kind of nice. We're working from home this week, which is a cool change of pace for myself and the rest of the team. But so my thought process with metals here is I like gold in one of two scenarios. I like it from a momentum play, like a breakout, retest, continuation play, or if you get a larger scale pullback. Meaning if we're taking a look at this thing from the weekly chart, right? When I say a larger scale pullback, what I'd be interested in is like a pullback down to like 2,400, 2,500. This area I like a lot for just a longer term continuation idea. In fact, I'm just curious in terms of moving averages. Yeah, so on the weekly chart, you can see we have a good bit of room to pull back on the weekly chart and still be in a very strong upward trend, right? On the weekly. Now that's like a long-term uptrend. That's not necessarily, if you get that kind of move, then on the daily chart, it's going to look like a downtrend. But from a long-term perspective, there's two scenarios that I like gold as a setup on right now. I like the idea of a bigger sell-off and buying that dip on a longer term basis, right? So if we get, if we get a couple weeks, or that would probably be months, couple months of downside move in gold, then that to me would be some good value to get some long-term buys going on gold. But where we currently sit, if you're talking about momentum trades, we go back to the daily chart. What I'd like for momentum trades would also be bullish setups. I don't really have any bearish setups currently on gold. Momentum would be a break of that 2,700 and then pullbacks and into continuations. So that's kind of what I'm looking for on gold right now. It's been stuck in a range. It's been a couple charts that I watch a lot have been really kind of frustrating recently. And when I say frustrating, what I mean is just not a lot of setups. So I trade gold a lot, or when I can, I trade it a lot. I traded gold alongside really, really well during this period of time. That being said, since then, once we've gone into this consolidation, I basically have kind of been on the sidelines, just waiting for gold to make a bigger move. I thought we were going to break out here. We did not quite do it. So what I'd be looking for here, like I said, break and retest on gold. For the gold guys and girls, that's what I'm watching right now on this chart. So we'll keep an eye on it, but definitely just going to look at other things, right? If there's a chart that I really like to trade, but it's not giving me any setups, then there's no point in staring at it too much and too often, because then you're just kind of battling this battle of either you're going to force a trade that you shouldn't take, or you're just going to be wasting time when you could probably find some good setups elsewhere. So if I look at like the NASDAQ, for example, this is another one. I'm really bullish on the NASDAQ, but this chart is so untouchable for me until you get a broader pullback, right? If you're talking about the NASDAQ at 21,000, if you're talking about the NASDAQ at 20,500, then maybe I can look for some setups there for continuation long plays. But if I can't get a pullback, then I just need to stay out of the way. You know what is pulling back is the Dow Jones. Look at the Dow right now. This is a very interesting story in indices world, because we've got the Dow Jones pulling back aggressively, and at the same time, you've got the NASDAQ just rocketing higher. Like, let's look at these two charts side by side, and I'll show you what I mean. So let's do a up and down chart. Gosh, where is that? Oh, here it is. So so Dow Jones is on top, and look at this. If I show you the NAS on the bottom, look at the difference in these two charts. And let's talk about why that is. Why is one chart doing exceptionally well and the other chart is doing terribly? Well, not terribly, but you know what I mean. Why is that? Look at this. Like, how many is this? 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row to the downside for the Dow Jones. Meanwhile, the NASDAQ seems to be going up every single day. Well, the divergence here, the big difference is that this is a tech index pretty much, right? Some Forex brokers who create CFDs off the NASDAQ, they'll call it like Tech 100 or US Tech or whatever. The NASDAQ is very heavy on the technology side of things, whereas the Dow Jones is more of a defensive to a degree, blue chip names, staple companies, United Healthcare, which has been dragging this thing down quite a bit. So my point is technology has been absolutely smashing everything else right now. And that's been the theme for the last few years. But I know I'm going to issue this cautionary tale for the 1700th time right now. But technology, although it is an exciting sector, right? It's my favorite sector. You can still overpay for sectors. What I mean by that is technology stocks have a tendency to get too overbought and too oversold throughout tech history. Let's go back to our single chart view. And what I'll show you is if you go take a look at the NASDAQ in even just a recent example, tech stocks got really, really crushed in 2022. So if I go take a look at this, right? So this is 2022 technology sector, XLK. The tech sector, if you had just been long technology, was down 35.6%. That's a big drawdown. Let's take another example. Actually, I don't know if this is any better, but let's look at healthcare during that time. If we could take a look at healthcare, oh, this is definitely a lot better. In 2022, that's a 12%. At the peak to trough, the worst case scenario, you're down about 17%, let's call it. So what you can see here is that there's a couple ways to have better than average performance in the stock market specifically. And that's, you can either be outperforming it on the way up or outperforming it on the way down too. What I mean by that is that if you're just super long tech and technology and cryptocurrencies and all those get absolutely crushed in a bear market, there are other sectors that hold up pretty well. Like healthcare did pretty decently well. Also, energy during those years did exceptionally well. So if you were long energy during 2022, while everybody in the tech world was getting crushed, you actually made a lot of money. The energy sector went crazy in 2022. Now, obviously, that was a little bit of the Russia-Ukraine stuff, right? Energy became a very, very outperforming sector for that reason. And energy has been getting crushed recently. I actually look at energy stocks right now and I say, I actually see there's some good opportunity here. There's companies that I like ExxonMobil, that I've been looking to build a position in. So there is stuff out there in this market. It's just, I'm kind of more on the contrarian side of things right now for what I personally am looking to play in this market. I'm not looking to chase technology off of a cliff, not necessarily saying that the tech sector is about to fall apart, but I just think that the risk to reward right now with tech stocks, specifically like the NASDAQ index, the risk to reward is just not super attractive to me. Now, that being said, I still like the NASDAQ quite a bit on the long side, but I would just need a pullback. So long story short, you give me those kind of pullbacks, I'll probably play technology once more. But tech stocks can get really, really overbought, and it can be really ugly when they turn around. Okay, guys, we've got the retail sales number coming out in about 50 seconds here. So I'm just going to switch views on my chart so we can watch a reaction to everything. We'll have gold pulled up. The dollar will have stocks. So we've got retail sales coming out in just a moment here. Let's see if this does anything to the charts this morning. About 30 seconds to go here. We've got for you on the screen stocks over here, gold, silver, dollar index, oil, and we'll go ahead and roll our breaking news coming in. All right, should be getting some numbers out of retail sales here this morning in just a second. This is pretty crucial to determining the state of the consumer. Let's see what we got. Gold spiked just slightly. Dollar index slightly lower. No big moves here off the rip. Let's see what we got. CAD CPI also came in higher than expected. So inflation a little hot out of Canada. That's interesting. Retail sales came in at 0.7%, although core retail sales, which I believe excludes automobiles, excluding automobiles, core retail sales was actually down. So you had retail sales strong, but core kind of weak. So dollar index slightly lower off this. Let's go take a look at the dollar. Okay, so dollar index here, a little bit lower here on the day, off of some mixed to slightly weak retail sales numbers. In terms of gold not moving too much off of this. Silver still down on the day, but slightly less so now. Take a look at some of the indices. SPX still down about 0.3%. NAS is down about 0.3% as well. Dow Jones down 0.4%. Interesting. And Bitcoin's doing its thing back up to 107.5K. My goodness, this thing is just a roller coaster recently. Crazy stuff. Dollar index overall still looks pretty strong, to be honest, compared to a lot of the other currencies out there. I mean, look at the euro, the pound, everything is just getting crushed against the dollar lately. And then I saw Australian dollar, and this made a lot of sense based on the discussion we had yesterday, based on the Chinese 10-year government bond yields. I mean, look at this thing. This thing is off of a cliff, right? This is Chinese government bonds, the yield that they're offering. So yields in China are falling aggressively. And what that signals to me is that the economy in China is really struggling. And a struggling China, how does that impact the rest of the world? Well, one of the big and obvious ways it impacts the rest of the world is it hurts commodity prices, right? Silver, copper, oil prices. These things are very sensitive to the Chinese economy because the Chinese economy is so manufacturing heavy. So I don't know, that's a little bit of a concerning story to me, especially with like tariff war stuff coming back, trade war stuff. Who knows how bad it could get in the Chinese economy. The point being that if it does worsen, could that become more of a global problem? It's kind of tricky to say. It's very East versus West kind of world, but China and the US still kind of need each other, right? They're both still ginormous trade volume liquidity, the US being that massive consumer and China being that massive producer. That dynamic is still pretty crucial to the global economy. So I don't know. We'll have to see where that goes. Current setups on the Edge Finder, we've got Pound Aussie, Euro Aussie, NASDAQ, and the Nikkei giving us bullish ratings currently on the Edge Finder. And on the bearish side, we've still got our Treasury bonds as well as dollar ZAR on the bearish side. Really interesting. I also wanted to mention for those watching currencies, the Australian dollar is a net loser from the slowdown in China. Australia is a massive exporter to China, so a slowing China is not very good for the Australian economy and the Australian dollar as a kind of result of that. So the Australian dollar looks exceptionally weak. It just broke a really long-term level of support around that April, August 2024. These levels of support looks like it may be headed back to test down around the 62.97, which is kind of crazy. That's a big drop here for the Australian dollar overall. Let's take again, we've got about an hour before US stock market opens up. US stocks just slightly lower here. And again, I find it so interesting right now, the divergence in the stock market across the board. You take a look at RSP. This is the equal weight. Equal weight looks rough, right? You take a look at the equal weight S&P 500 looks pretty rough. But then you compare that to, the S&P weighted, right? So it's, Apple getting a heavy weight in there, Nvidia, Broadcom, these big companies getting big components of the index. It's looking a lot better because the ginormous companies out there are really pulling their weight. Take a look at Broadcom yesterday, was up again, a massive 11%. I mean, just some parabolic moves happening in the stock market world. But it's interesting because it's kind of happening at the top level, right? So you've got these big companies, but then even Nvidia, right? Did you guys see Nvidia? Nvidia is struggling, down another 1.8% here. Nvidia, I mean, I find it really interesting to see that, you've got the stock market rallying so hard and Nvidia kind of not really even participating. To be fair, if Nvidia starts to participate, that could be a very bullish catalyst just to kind of push the stock market. But it's interesting. You've had a little bit of Broadcom taking the reins recently in the manufacture or the chip semiconductor world, right? Anyways, Nvidia fell below a level of support here that I've been watching, which is really interesting to me. So this big level of support around 133 on Nvidia, you watch that for to see how price reacts under here, because if this kind of goes like this, right, we start seeing continued selling in Nvidia, I do think that will begin to weigh on the stock market. Nvidia is still such a ginormous paperweight on the stock market, if you will, right? I make the joke sometimes that my cat, he's a big guy, when I'm in bed, he's like a paperweight on the bed because he's so heavy. Nvidia is kind of like that to the stock market. He's the big chunky cat that lays on the covers and keeps you from moving. If you have a cat or a dog, you would know exactly what I'm talking about. When your pet lays on the bed with you, it's like, especially if they're a big animal, oh my gosh, it's hard to move. Anyways, that's kind of like Nvidia to the stock market. Nvidia is a huge weight. So if you watch the indices, I know a lot of our audience watches the indices. It's what I watch the most. Then keep your eye on Nvidia, because it's been so interesting, this rotation that we've seen. Companies like Apple coming out of the woodwork. This company was kind of a slow burner for a while. Boom, went to the upside. Broadcom, absolutely parabolic, helping the stock market indices story. I mean, it's very interesting because then you have other companies, Nvidia, I believe AMD is also struggling out there. Yeah, I mean, look at AMD back down to the lows. So you've got a lot of divergence here in this story. You've also got, I mean, can't even leave out United Health. This has been a stock to watch. United Health has been dropping so hard. You guys heard the story with the whole unfortunate killing that happened. You have to just look at this stock and just wonder, how far does this thing go? I mean, we just crossed under 500. We were just at 625 a couple of weeks ago. So really aggressive selling in some specific stocks. It's very interesting to me because the stock market still seems to be holding up, yet there's a lot of individual companies that are really falling apart. One thing that's really holding the market up, my goodness, Tesla has been going crazy. While we're on the stock topic, we can't leave Tesla out. I mean, this thing is a rocket ship to the upside. That's a fitting analogy, considering Elon Musk is, of course, the CEO and does all the SpaceX stuff as well. I mean, Tesla, I actually have a covered call at 420. So I don't have any more upside in this stock. I own the stock much lower in price, but I sold a covered call right here, basically selling my rights to the stock in exchange for a premium. Feeling kind of silly for doing that now because I collected a little bit of premium for this, but of course I'm missing out on some massive extra gains. But who would have guessed that Tesla would do all this in a single month? I mean, this kind of move to me in the stock is crazy, and I'm happy to get out of the stock, take profits on it, and come back to it when I feel like people are not loving it so much. Right now, I think Tesla is just so parabolic to the upside. And could it continue? Sure, it could. It could go to 550, right? It could just keep going. But I like to buy stocks specifically when they're low. So when people don't parabolically love them, that's a little bit more interesting to me. Anyways, let's see what else we've got. Back to gold for a second. Let's see if gold did anything following the retail sales numbers. Not really any big moves there on that front. Silver also, I mean, these things have been kind of just struggling. Meanwhile, you've got a good story for that out of China, right? I mean, you just had this big pop in Chinese stocks. This has been a theme here the last few months. Has been a lot of stimulus talks, and then it kind of fades. Stimulus talks fades. Stimulus talks fades. I have a long position on it just because it's a bit of a diversification thing in my portfolio, but also, Chinese stocks. I think that I have this theory, this contrarian theory that China doesn't want to be left out of all the party fun, right? That's going on in the West. There's been so many, stocks. Take a look at the DAX, right? If you take a look at, let's do German 40, right? So you've got stocks all over the West doing quite well for the most part, right? Here's the German DAX up like crazy. Again, obviously, the US stock market's up like crazy. You've got the UK stock market doing all right. If it would load, I'm not sure why it's not loading. Hold on. Might need to just reset my trading view. Yeah, so I mean, actually, UK stocks not doing too hot, but you can still see UK stocks are still up overall. The Japanese stock market has had a pretty good year this year, right? So you've got all these Western kind of economies having killer stock market years, and China has been just having their stock market has been down in the dumps for years. So I think there's a little bit of a more serious contrarian view I can take on China, which is I think that they're going to probably step in more aggressively and do whatever they can to get their economy and stock market to hopefully bottom out for them soon, right? But we'll see. I mean, it's been an interesting story. China definitely there's been a ginormous exodus over the last decade from the West investing in China too. I wonder how much that plays into it. Liquidity and capital markets play a huge role in investment and in growth for economies. So, it's really interesting. I'm happy about the crazy bullish moves in the stocks that are going up lately, but it makes finding setups way more difficult. Yeah, it does. I'll tell you, I was looking at this. I'll do a stock analysis here for you. We talked a lot of stocks today. So, yeah. Yapper Nick goes again, repeating same thing he said in the 5 days. Absolutely, I did. I repeat myself so much, but it's honestly intentional. There's a number of things that I repeat over and over and over intentionally, both for myself and for my audience. Like, for example, talking myself out of chasing the NASDAQ. You'll hear me, if you've listened to my videos the last few days, I know you've heard me say my cautionary tale in the NASDAQ like 1,500 times. I'm really aware that I repeat myself. In fact, it's all actually intentional. By repeating myself, I know some people who haven't been in the show are going to hear it the second time around or the fourth time around. I also know that by saying this and reiterating it to myself, it will drill it in for other people and also for myself, right? So I am very aware that I repeat myself, and I absolutely do yap about this stuff. But it's also, you got to think, I got to fill up, hours and hours of content. I live stream every day. So you can't expect me to have endless new content every second. That being said, here is some new content. I was looking at something interesting, and it's Adobe. This is a stock that I like. I believe my video editors love their stuff. Adobe Premiere. You guys, James Chandler, you guys use Premiere, right? Or did you switch? I always get them mixed up because there's a couple that sound familiar to my non-editing brain. But this is a company that I like. Let's take a look at Adobe. So check this out. James says he does. Gotcha. So Adobe stock has been really struggling recently. So check this out. This is a stock that I've been looking at, and I would like to see the market itself give us a little bit of a pullback, because obviously, most likely, Chandler says he uses Final Cut. Is Final Cut owned by Adobe too? Or what is Final Cut owned by? I'm curious. I'm not sure. Oh, it's owned by Apple. Okay. Okay. So let's just look at Adobe here for a second. So this is a stock that, I mean, over the long term, this has been a monster of a company. Um, all of us have used Adobe products at some point in our life or not. And you might not have even noticed this. You might not even know that you use Adobe products. But Adobe has a huge list of great tools and products. They're a software company, which I love software companies in general. And they're just so unloved recently. They've gotten absolutely nowhere in the last few years. Going back to 2020, the stock is flat, right? So it's not seen all of the ginormous upside moves that a lot of software companies have. So I like stocks that are kind of forgotten. I like stocks that are trading at decent valuations. I don't like to chase the hottest stocks when everybody else wants them. I like to look at stocks that might have been forgotten kind of treasure, if you will. Do I like Adobe at these levels? I don't hate the idea of maybe starting a position. So when I say start a position, I do like the dollar cost average in stocks that I like. Um, so yeah, if I'm taking a look at Adobe, for example, and I want to look at, we just built this new income statement sheet on the stock box. So if I'm looking at Adobe, what we can see here is consistent overall revenue growth on this company. I mean, look how steady their revenue growth is. More clients using their tools. They can slowly raise prices on their products and people will still pay them. Has a massive brand loyalty to its customer bases. A lot of people who use Adobe stuff, they are Adobe lifers, right? There's a lot of really powerful tools that they build. The other thing that I like about this chart is take a look at the net income. Net income on this company is also steadily rising, predictably, consistently, right? This is one of the reasons I like stocks a lot. Stocks, good companies over time rise in value. Now, Adobe is not the best example because it's had 4 years of flat to no growth, actually 5 years of flat to no growth in its stock. But to me, I like the risk to reward here, right? You've got a stock that has good overall financials. They make money, they grow revenue and income consistently. And although the stock price has gone sideways, the price has gone up, and profit margins, this pink line, have also gone up overall. So I look at a company like Adobe, which has been not nearly as popularized as your Apples and your Googles and your all the other names out there that are pop flies, right? Going crazy, Palantirs. Those are great companies too, but I like to get companies when they're selling at a discount, and I think that they have a decent upside growth. So when I look at Adobe, right, that's a company that I like. So I may look to start a position in Adobe, especially if we get a broader pullback in the stock market. So if you get, a couple weeks down, Adobe probably will go down too. And then I feel like I'd get some really good value on that stock. So that's a company that I'm watching right now on my watch list that I'm really interested in. So yeah, something to consider is, when you want to, for me, when I want to buy stocks, I want to buy stocks when the NASDAQ itself or the S&P 500 is down and some of the individual companies have gotten absolutely forgotten and sold off hard. That's how I like to buy stocks. And I'm watching stuff on the stock box. This is our new tool that we launched this year. By the way, if you guys would like to get access to the stock box, let's do something. If you're an existing Edgefinder user or you're interested in getting the stock box and you don't have the Edgefinder or stock box, we'll drop the link here in the chat to our direct message center, our talk to. If you already have the Edgefinder and you want the stock box, we offer really big discounts to existing customers. If that's something you're interested in, we've worked on this all year long. If you're a stocks person or you're interested in getting into stocks, highly recommended. Pick up a copy of the stock box. We've been working night and day on building this tool into something just as cool as the Edgefinder over time for stock traders. So if you're a stock person, an options person, sector person, all these things that I trade too, I highly recommend getting a copy of the stock box. We do also offer trials on this. We offer a paid trial, $99 for 30 days access if you'd like to play around with all of our stock market data. To do that, maybe Chandler, James, one of you guys could grab the link off of the a1trading.com/stockbox page. That trial link is there. I don't think I've shared that with you guys just yet, but you can find it on our website, a1trading.com/stockbox. So let's see what else we've got here. About 40 minutes here before US stock market opens up. NASDAQ's trading slightly lower here this morning, just cooling off from yesterday's crazy upside move. What is more interesting to me, as I've been talking about, is the divergence here between the Dow Jones and the NASDAQ. I mean, look at this thing. That's some really interesting selling pressure coming into the Dow. The Nikkei also looks really interesting. I like the idea of being bullish on the Nikkei if it gives me some kind of breakout here, right? We've been consolidating for a few months now. If you get a breakout, pullback, continuation, I like that trade a lot. Thank you guys for grabbing that link. If you guys want to trial the Edge, the Stock Box or the Edge Finder, there's the Stock Box trial link. If you want to try the Edge Finder, we'll also drop that here in just a second for you. We got links dropping all over. If you guys are interested in trying either tool, both are half off trials this month. So, let's see. Here's Apple too. You know, Apple has also been an interesting stock just to look at, because Apple has done so exceptionally well. And as such, there's such a loyalty to this stock. And I like Apple too. But what I find interesting with Apple is that, you know, you've had a couple years of not the most impressive revenue growth. They launched the iPhone 16 and it was pretty unimpressive so far results. I think it's the iPhone 17 that a lot of people are starting to get bullish about, because the iPhone 17 idea is that's going to be the first Apple iPhone that really takes Apple Intelligence to the next level, which is their AI stuff, right? And honestly, I can see that being a really cool feature that may get people out there buying iPhones. So I understand the hype around Apple stock, although revenue for the company has been not super impressive last few years in terms of revenue growth. I mean, revenue amount is massive, but the revenue growth for this company is what makes the stock go up or down, right? Well, you know, the idea is that in the future, this revenue could spike if the Apple Intelligence stuff creates a lot of buzz for the Apple's iPhone 17. So that's kind of the story with Apple, I think. That being said, you're pricing out something that's many months in advance, and we'll see what happens. Gold down 0.6% now. Look at that. Gold's having a little bit of a rough day and a rough week. I think there's a little bit of PTSD from this fake out that kind of happened, right? You had this, looked like we were going to make the move and then completely fell apart there. Really interesting stuff. I think if gold breaks these lows, then we go back to what we said earlier in the stream, which is, you know, that would be a short-term bearish trend starting to form. And I would be looking for, you know, lower prices for possible long-term buys on gold. We'll see, though. That's kind of an interesting. I like gold long in two scenarios. I talked about this again. I'm going to repeat myself here. Again, I don't let me scare you with repeating myself. Breakouts to the upside, momentum continuations. I like that for that kind of long trade, meaning like entry, tight stop, looking for expansion of price quickly, or a bigger, longer term pullback. In which case, I'd be looking to more like dollar cost average into a position and kind of just let it sit in the portfolio. Silver down 1.12%. I mean, silver's been an interesting one too. Look at how silver has come back to this level of support multiple times. Cannot seem to break it to the downside, or, I mean, it did make a nice move off of this, but kind of just been stagnating here. And again, metals do look in the short run a little sketchy to me from the perspective of China, right? I keep going back to that, but that yield chart, man, really makes me a little bit nervous. Elaine says yen pairs. Yeah, let's take a look at some yen crosses. Let's take a look at dollar yen. Dollar yen has had some nice upward momentum here in recent couple weeks. Just going to do major currency pairs. I'm curious what the yen's getting. So yen pairs or the dollar against Japanese yen's getting a -4. COT report's interesting. There's been a lot of accumulation of Japanese yen, which is making this chart get a stronger bearish reading. So we can go inspect that really quick because I think this is interesting. If you want to talk about yen pairs, let's look at the COT report because this is really interesting to me. The Japanese yen, in fact, we can use the COT data history tab for this. I think that's going to be better. So let's select Japanese yen and check this out, guys. So the COT data history allows us to look at the historical holding positioning of institutional money, right? Are they buying something? Are they selling something? In this case, I've selected the Japanese yen, so we can take a look at Japanese yen futures to see what, again, institutions are doing with yen futures contracts. Let's take a look. So we can see the latest reporting. Longs outweighed shorts overall in net positioning, and they added significant longs and they massively decreased short positions in the Japanese yen. To me, that is really, really interesting because, again, this is not something new. Look at the last few weeks of what's been going on, guys. This actually is pretty alarming, to be honest. Like that is an alarming amount of consistent, regimented yen buying. So look at this. December 3rd, they added long contracts, decreased short contracts. Super bullish. They did the same thing December 6th, added longs, decreased shorts. And then the latest report, they added longs, decreased shorts. That is really consistent buying of the Japanese yen. And what does that tell you? Well, that tells you institutional money is building a long position in Japanese yen. What do we know about the Japanese yen? It's something that people typically buy when there's expected concern in the global economy. So what really fascinates me about this move is that it's been so consistent, right? This yellow line on your chart that we've built into the chart is a long percentage gauge. So you can see the increased positioning in Japanese yen has really shifted pretty quick. Institutional money seems rapidly accumulating a position in Japanese yen. Notice, oh man, you guys ready for this? The last time we saw an accumulation in Japanese yen like this, you guys ready for this? Last time we saw Japanese yen accumulation like this was in July of this year. What happened in August of this year? This is interesting, man. I haven't even looked at this myself. In July, this is July. So again, I'm not making this up. I'm not telling you what, institutional money is doing based on candlestick patterns. I'm not trying to forecast it or predict it or be cute about trying to spot, oh, this is an institutional candle. I'm not trying to disrespect anybody, but I'm not guessing. I'm looking at the commitment of traders report. That is straight up what institutional money reported their positionings to be, not guessing on candlestick patterns. I don't like that stuff because I feel like it's too frou-frou, too guesswork. It's too subjective. I like just straight up looking at the CFTC's commitment of traders report, and we can see institutional money was accumulating long positions before the ginormous drop in yen crosses. There was a major accumulation of yen before the big drop. So again, I'm not speculating. I'm not a conspiracy theorist. I'm not doing anything like that. That's just straight up what was happening. There was a ginormous accumulation of yen, and then the yen got very, very strong. And they continued to build long positions as this thing continued to drop. But what I mean by that is long yen positions, meaning shorting this chart, right? They were shorting, and then they started taking profits. But now they're doing it again. We're seeing this in real time here, guys. We're seeing yen accumulation once more. So I think that that's really worth paying attention to. Now, again, they accumulated yen longs before the big drop. So it's possible that the yen will continue to weaken for a little bit, but perhaps there's another sell event coming according to commitment of traders data. It doesn't mean that it has to happen next week. Doesn't mean that it has to happen right now. It's just something to pay attention to. That's my goal with these live streams, as well as with our market software, is to show you something that's happening in the markets so that we are informed, right, ahead of time. So again, I just think that's really, really interesting. I didn't notice it was so regimented, but it's the exact same kind of accumulation that seemed to have been going on before the big move that we saw last time. So we'll see if we get some sort of big move in Japanese yen crosses once more. By the way, I mentioned this earlier. If you guys would like to trial the Edge Finder, our trials are currently half off. So you can try the Edge Finder for 30 days right now for just 99 bucks. If you're interested in doing that, if you want 30 days of the Edge Finder to play with it, see if it's right for you, do us a favor, send us a message on our website. We'll drop the talk to link so you can speak directly to our support team. It's $99 right now for 30 days access to the Edge Finder. So if you want to play around with this data, again, that is in terms of development costs and building this thing out. It has been a massive investment and a lot of team effort on our side to build this thing. We want more people to use the tool, and we want to make affordable trials. Why are the trials not free? Well, it's because we administer them manually. We have somebody on our support team, several people. There's 3 different people on our support team that administer trials to make sure you know what's going on, so that you have somebody to walk you through the trial, to help you through the software. So to pay for their time, we do charge for trials. Also, on our own end, we won't ever be doing for now, we have no plans to do free trials ever again, because what people were doing is they would just get a trial, and then the next week they'd use a different email. And then the next week they'd use a different email. So they're just getting free access over and over and over. So we reserve trials for serious people who want to try our software. Also, this $99 will go towards your final purchase of the tool. So if you want to get access to this, if you want to use it for yourself, send us a message right now. Use the direct message link that we just dropped in the live chat, or in the description. If you're watching this back at a later time, you can also just go to a1trading.com and select start a live chat in the bottom right. Yeah, so really interesting. That makes yen pairs especially interesting to me right now. So you've got dollar yen here trading around 153.7. I'd be cautious, in terms of how much upside I think there is for dollar yen. I think if I'm bullish on the dollar, there's just other charts that I would prefer to play over dollar yen at this time. euro yen. So, I mean, if you start looking at these things with that context of, look, there's huge kind of accumulation of yen longs, it makes me a little bit nervous. You start looking at these levels and you say, well, you know, maybe those are areas to be cautious at. The Australian yen looks like a really interesting candidate, especially with weak China data. This chart just looks really sketchy to me for the time being. But again, that we spotted this all because the Edgefinder's COT score for dollar yen is a glaring -2, which is a pretty strong reading for COT data. So trend is still to the upside, but if this flips, once the technical breakdown starts for dollar yen, that might be a play that I look to take myself. On the short side, dollar yen. I tried once recently. I was a little early to the dollar yen short, and I closed it for like a very, very small loss. But I'm going to watch it for a reversal, watch for signs of breakdown on dollar yen. And then what's probably going to happen is that if this trend score flips to -2 instead of 2, that is going to turn this into a strong bearish setup on the Edgefinder. So there's yen pairs. Really interesting. I'm glad whoever brought up yen pairs, I'm really glad you did, because they are hot on the watch list right now for me. Gold reversal. Off the daily chart, I don't really see anything on gold to do unless you're talking, if you're bullish, maybe you're watching this area for a bounce. We'll see. Or this area. But for me, I wouldn't take this trade. Maybe from a long-term perspective, like a dollar cost averaging approach, maybe I'd start buying some gold in these areas. But from a short-term trading perspective, I think there's a short-term bearish move at these breakout points or a short-term bullish move at a break and retest of these highs. That's the only thing on the short term that I see for gold. From a long-term perspective, like I said, I'd be interested in maybe accumulating some gold long positions at these levels like 2,600, 2,550, 2,480, something like that. About 20 minutes to go until the U.S. stock markets open up. Just a reflection on retail sales. Retail sales were a little bit mixed here this morning. Nothing too market moving. Stock market, let's take a look at just the 5-minute chart. You can see here's that 830 candle. So you can see it's just a kind of a mixed response there. Bitcoin's up another 1.3%. I mean, look at cryptocurrencies go, man. They're going absolutely parabolic right now. Congrats to anybody who is still long crypto. I traded Bitcoin from 70K. I took a long position here, and I closed out right here. Obviously, in hindsight, I feel stupid. I should have just held and continued. But hindsight is a dangerous thing in trading land. I took a good trade on Bitcoin. I took another attempt, ended up getting stopped out for a small loss here. So I've not been perfect on Bitcoin whatsoever. Although I've made some really good money this year just trading Bitcoin longs. I'd be interested in Bitcoin again if it gives me a pullback. But until that happens, until the dust settles a little bit on this, guys, I can't justify buying up here. There's nothing, you know, there's the true believers out there, like the super crypto bulls that may be playing this thing long. They might be just going crazy, but you know, this thing's going to the moon, super bullish kind of stuff. But for me, it's just a little bit too risky. Also, guys, we're going to go ahead and take a quick break. Before we do that, let me just remind you, if you want to try out the software tools that I mentioned here today, the Edge Finder or the Stock Box, both We do have half off trials available for $99 for 30 days access. If you're interested in trying the software, this does get credited towards your final purchase. We'll drop the link here to speak directly to a member of our support team on our website to get set up with a trial. If that's something you're interested in doing today, send us a DM. We'll happily set you up with some information and connect you to someone on our team who can help you. We're going to take a quick break. And then up next, we got Forex James taking over the show. Stay tuned.
Shopping for presents this holiday season can be stressful. What to get for mom? What to get for dad, grandma, your uncle? It's all just too much. Lucky for you, A1 Trading has the perfect product for everyone on your list. Introducing the A1 Stock Box. Let mom keep up with all her favorite brands like Lululemon. Dad can keep up with his reading by checking out the latest headlines. And everyone knows grandma loves hedge funds. She can keep up with what her favorite hedge funds are buying and selling each quarter, and even see what percentage of their portfolios are diverted into what stocks. There's something for everyone in the A1 Stock Box. Available now at a1trading.com.
Hello. How's everyone doing? Hope you're all having a great end to the year. We're pretty much done now. I'm done anyway. Basically out of all my positions. I've got one swing trade on Euro Australian that remains open, although it's not looking too great at the moment. But to be honest, it's completely fine. Happy to stay in this one, either stop loss or we'll take profits possibly next year. So yeah, no active positions. Actually, my portfolio is here. So you can see here's the Euro Australian trade I just showed you, completely out of everything else. Done with Euro dollar DCA shorts for now as well. Might get back into those next year. But yeah, for now, no interest. So just before we go any further, here's an update on the portfolio. Currently up 23%, roughly, obviously rounding up, 23% since September, which is the inception of this account. This month up just under 6%. Last month was 11.6, so doing very, very well towards the end of this year, which is nice. Got some nice Christmas trading on my side. What do you think about US 30? It's time to buy. Let's have a look. I'll be honest, I have no idea what's going on in terms of economics. As I said, basically done now for the year, so I've not been paying attention. I've not been reading any bank reports, no articles, none of that, just completely out of the markets, really. In terms of technicals, though, I don't see anything here. I suppose you've got this area sort of in between, where is this? 43,500 and 42,980 is kind of like the first area I may look to go long. From there, the only other stopping point would be the next support, which is significantly further down. Let's have a look. The daily, weekly, we're still in the, obviously the long-term uptrends remain intact. However, the weekly, quite a lot of bearish momentum. The daily is just falling off a cliff. H4 and H1, extremely bearish. So to be honest, I wouldn't really want to buy into this waterfall. You're really fighting the trend if you're going long off this. Yeah, no problem. Do you trade futures? Nope. I am just a very basic CFD degenerate trader. Don't trade stocks, don't trade crypto, don't trade futures. I stick to my bag of eggs or my bag of tricks, and that's it. Lauda? I don't know how to pronounce that. I'm sorry. Hello. Hope you're doing well. I'm just going to see what's on the edge finder. As I said, not really been in the markets really at the moment, so we can go through some stuff together. We've got the Nikkei bullish reading, it's actually the top reading. Pound Australian, we've got Nasdaq, Euro Australian, Pound CAD, Euro Pound, Australian Dollar Swiss, Australian Dollar Yen, and Dollar ZAR. Don't trade Dollar ZAR. Yeah, there's nothing here that piques my interest, to be honest. Although Euro Pound does actually seem okay. I was DCAing shorts on Euro Pound, but I closed out at break even because I just wanted to get out for Christmas, as I've been saying for a while. Although, you know, I could see further downside. I think the euro is pretty doomed, really. There's still no supportive data. Euro dollar, if things stay the way they are, I could quite easily see parity come into play in Q1 2025. I think euro pound also has a strong chance of of continuing its run to the downside. Would expect some sort of rejection here, especially as we've had a bullish H4 candle followed by the current H4 candle bullish as well. So possibly some sort of move back to the upside before we completely start to run further down, looking for a break of support, retest. And on this retest, that's where I would possibly look to take a swing position. Hello. Hey, James. Great show. Good. Thank you. I've only just got on, but I appreciate it. Hello, James. Do you mind having a look at pound dollar? I'm currently I'm looking for a breakout due to the news today. Oops. Yeah, we can have a look at pound dollar. Oh no, what's going on here? Oh, whatever. Pound dollar. Not in this position, although that would be quite nice. Why is my chart moved like this? What's going on? There we go. Okay. Let's see. So I would expect the dollar to continue its overall direction. I mean, we've just hit 107 again, and we are seeing rejection, although I think we are going to continue to see dollar strength. We've got the rate cut. I think the rate cut's tomorrow. Let me just double check. What day is it? It's Tuesday, Wednesday, press conference, statement, economic projections. Yeah, okay. So yeah, generally speaking, I'd expect the dollar to continue its strength. We might see some short-term downside due to the rate cut, but I wouldn't expect anything significant. Then, in turn, I would expect pound dollar to continue lower. So if we have a look at the daily 200 moving average is bearish. We're still hovering above price, indicating a downtrend. So I would really be looking to short stop loss somewhere around our 200 daily moving average, allow it to act as a dynamic resistance in this situation, taking the market down to the next level of support down here at 1.236 roughly. So I think that's sort of the only situation I see on pound dollar right now. I don't see anything really to drive it higher. I think the UK is pretty stable at the moment, but yeah, definitely not in a situation where I'd want to buy it, especially against the dollar. Russian, euro dollar. Yeah, so my bias hasn't changed on euro dollar. I've been short really for the past 2 months. In fact, I'll see if I can show you my history on pound dollar, because it looks quite interesting. Actually, it looks a bit like Don Vo's chart. Obviously, mine's profitable though. So we look on the daily here. Put my trade history on here. So you can see I've been shorting since, when was this? The 9th of September. So yeah, since September, I've been shorting euro dollar, and nothing's changed in my book. If anything, parity's coming at some point. It's more just a matter of time rather than if it's going to happen. Obviously, that's more looking at the situation as if the Eurozone data doesn't start to improve, which at the moment it's not. What's your take on yen pairs? I'm mixed on yen because, as Nick said just before I got on, the COT data does reflect a large buying sentiment within the larger market participants. The problem I've got is I don't think we're going to see a rate hike coming in December. I think we're going to get a hold. Now, the reason I say that is from what the BOJ has already said. So I'm not going to repeat it because honestly, I can't remember it off the top of my head, but roughly it was along the lines of They're not in a rush, and there's no harm in waiting. So it doesn't sound really optimistic in my book. The probability of a hold is 45%. The probability of a hike is 55%. So it's not really overwhelming in terms of rate hikes for the BOJ. I'm not saying they're not going to. It's just, for me, it's not enough. And COT data is a great tool. But again, as retail traders, we're not in a position, or most of us aren't in a position where we can or even want to start, placing large positions within the yen, looking for something, whether it's an intervention, whether it is the rate hike that may or may not come. It's just not something I'm wanting to do. Reverse Donvo, exactly. You know what? It's actually very similar to Donvo, because I think I've actually reached the most amount of trades I've ever taken. So since September, I've had 347 trades. I think Donvo had 300, something like that. So essentially, just completely undoing what he did. Obviously, for my clients, ripperonis for his clients. NJ bearish, H1 and lower. Yeah, I think a lot of the yen pairs are seeing some pressure today. Housey probabilities. Google, it's your best friend. Yo, James, what's your take on Brent crude oil? Would you play the waiting game until price falls to 70.5? I'm a bit conflicted on oil as well, to be quite honest. Mainly crude oil, not necessarily Brent. I don't really look into what's going on with Brent oil. But I know that OPEC has extended their supply cuts. The problem is I've been reading some research on oil because I've been quite interested really to get a stronger bias into next year. And all I've really seen is more talk of renewable energies, which is obviously a negative for oil. So oil is roughly 70% of the energy market, from what I've read, and it's expected to just continue to drop. Now, obviously, if the demand drops as renewable energy becomes more prevalent, we're going to see lower oil prices. So I'm a little bit on the sidelines. I do sort of think we are going to see lower oil, but it's more a case of, again, it's just if, no idea yet. So you're saying, would you hold until 70.5? So where is that? I think 70.5 is a little bit optimistic for short term. If you're looking to hold this into next year, I'd be quite happy really to hold. If you're looking to get out really as soon as you can, I would more look towards this above the support level at sort of 71.5. But again, that's just a technical outlook, so always follow your own analysis. Thoughts on Euro Australian and Pound Australian? Sure. So the Australian dollar is taking a little bit of a hit with obviously what's going on with China, because they're very interlinked or very correlated. Although with Euro Australian, I'm still on the fence that the euro is weaker. I think it will be weaker for longer. I could be completely regretting saying that in a couple of weeks' time after this trade has potentially hit stop loss, but we'll see. I think essentially all of the euro pairs really are going to continue to the downside. I think euro CAD maybe is an exception if we do start seeing lower oil prices. Again, Eurozone's pretty naff. As for Pound Australian, I'm not 100% sure, I'll be honest. Again, because I'm not really looking to trade. I've not done any research for the past sort of 2 weeks, so I'm not sure what's currently going on with the pound. However, the price action, I don't really trade head and shoulders. I don't look for price patterns really, but this does look like a very typical head and shoulders. It's very, very clear here. So I would maybe look to go short off this. And then if we can get some sort of retest here, maybe a scale in off that. But again, this is just from price action. But yeah, again, the Australian dollar doesn't seem very, very appealing to buy or sell, really. So that's just my basic 2 cents. We all beat Donvo this year. That's true, actually. Even if you lost 80% of your capital, you would have still outperformed him. But anyway, enough shade. I'm not here to try and bully the less fortunate. Gold is also interesting. So I'm stuck between a rock and a hard place with gold because it's been on such a rally this year. I'm very hesitant to get into any short positions, but I also don't want to get in long because we've just re-entered into this consolidation zone. Obviously, we were here, we broke out, and now we've basically just come back straight in. So there's nothing technical that would drive me to buy. I think right now it's kind of in no man's land. Next area would really be the previous low. If we get down to here, though, that's kind of a red flag to me. That would be a, let's see, that would be an 8.5% drop from its peak. And do I want to buy after an 8.5% drop? I'm not sure. Double top, double bottom. Yeah, it's just not convincing anyway. Gold seems like it's sandwiched. Yeah, Wonga, I completely agree. I think gold's in a situation where you can't do anything. There's, again, you know, I've been saying this for a while, but there is no economic catalyst, in my opinion. The tensions, or the global tensions, are still there, but they're not escalating, they're not de-escalating, nothing's really happening. You know, all of the rate cuts and rate hikes, obviously rate hike in regards to Bank of Japan, they're already priced in. So it's not, there's no edge to play in terms of the fundamentals. And obviously nothing there in technicals either. So gold is kind of a no-go zone for me. Yeah, so that's it, to be honest, in terms of, you know, what I'm looking at. Actually, that's a lie. We've got dollar knock. I'd still love to go short on this when the time comes. So what I see here, and this is purely technical, really, because the knock is very, very driven by oil prices as well. So again, if we are looking for lower oil prices next year, then this short trade isn't good. But if we're looking really at just the way that the market moves and its behavior, every time we come up into this Bollinger Band, we sell off. So this is 1, 2, 3, that's meant to be a 3, 4, 5, 6 times this has happened. Now we're in the 7th. Is it going to happen again? Probably, yes. But, you know, trying to time it, trying to do it, especially when the economics are basically pretty bullish for this market, it's not really my ideal thing to do right now. But again, I'm watching it, and we'll see if things do start to move in favor of a lower price in this market. I'll start taking some shorts. Yeah, it's interesting you brought up the Trump and peace in Russia, Ukraine. That's not going to happen, at least for now. So it was already spoken about. The way that conversation went essentially was the peace would be made by Russia keeping what they've already taken from Ukraine in the war they've currently got. And Ukraine basically just said no, because obviously why would they do that? You know, they're just going to give Russia things because they had a tantrum. Essentially, obviously, I'm dumbing it down a little bit, but you know, Ukraine's not very happy with the offer, really, so it's not really on the table. However, if a ceasefire does come and we see peace between Russia and Ukraine, we will likely see euro start to go pretty heavy to the upside. So if you're trading euro, especially euro dollar, that would be quite a big driver. China's buying lots of gold as it's traditionally given as presents for the New Year celebration. Lee, that's true, but it's definitely not something I'm going to take a trade from. Didn't Russia make more advancements? I don't know. I did see something about Ukraine taking credit for someone getting killed. It was someone in the military, I think someone quite high up. Someone got assassinated or killed or something. I'm fairly sure Ukraine took credit for it. But again, there's not really been a major escalation. It doesn't, at the moment, nothing's actually changed. So it doesn't really reflect on the markets. Yeah, retail gold is nothing. If that was the case, I'd take a loan out from the bank. I'd go to Costco. I'd buy loads of gold, pump up the market, buy gold CFDs, and then pay back the loan and profit. Can you take a look at pound Swiss, please? Yeah, of course I can. In a second. Okay. Pound Swiss. Not in that trade, sadly. That would have been a nice one. It seems pretty bullish. I wouldn't really suggest there's any technical reason to go short here. Again, don't really have any fundamentals to provide for this one, unfortunately, but the weekly resistance here is quite key. If we can see a nice bullish closure above and hold above, this would be quite a nice long position. And what you've got is a pretty decent target around here that would leave us with this 200 weekly moving average. So we've got two forms of resistance here that would be quite nice to target. The daily also does look quite bullish. We are above our 200 daily moving average. We could be seeing a very short-term retest of this resistance. Maybe I'm being a bit delusional. But yeah, it doesn't look too bad. So I guess, you've got two situations. Either it goes up or it goes down. So there you go. That's the professional analysis that you came here to see. Missile designer, Russian. Was that what it was? A missile designer? Okay. Yeah, after Christmas, so probably in the new year, I'm going to go really heavy in the research. I need to catch up and see what's going on. Some people do it before, they'll take 2 or 3 weeks off at the start of December and research and plan for the year ahead. I don't do that. I like to have a break. Quite happy to come back later. Head of Russia's chemical and biological defense forces, Lieutenant General Igor Kirillov, killed in Moscow explosion. Yesterday, Ukrainian protesters charged the head of Russia's chemical and biological defense forces in Ukraine. Okay, interesting. He was likely compromised, possibly. I don't know. Yeah, I really don't know. It's a mess, really. The fact that this is just day-to-day news at this point. People getting killed and spies and governments falling and all that sort of stuff. It's just we're living in a bit of a not dystopian, I think that's the wrong word. Living in a bit of a fantasy land. It's like we'll look back on this in probably 50 to 100 years and we'll be like, this was very clearly the start of World War III, or we were very close to the start of World War III. There's some people saying we're already in World War III, which, to be honest, doesn't really surprise me. Bet it was UK intelligence. There was someone in the UK the other day that was caught. They were a spy or something. I can't remember what country it was for, but it's all fun and games. I wouldn't like to dive into the espionage world. Oh, I would. I'd be James Bond. I'd be 008. I could definitely see myself jumping off rooftops with a nice selection of what are they called? Not ninja weapons, you know what I mean? Whatever they are. Ignorance is bliss. Ignorance is bliss, except for when you're a trader and you have to know all this stuff. When you have to read all the news articles about the world collapsing, and you can say, okay, nice, I'm going to buy gold now. I can make a couple of $100 while my whole country is falling apart. Anyway, it is what it is. What can we do? Enough complaining. I've just seen dollar CAD. That's interesting. I was looking at dollar CAD longs a couple of days ago. I decided not to do it because we were at resistance at the time. Where was it? Oh, it was here. I see it. So right here, I was looking to go long. And I really, really wish I did now, but what can you do? It's hindsight. But yeah, I think we're now pretty set really to go on to these next previous highs, the ones I've been discussing for the past couple of weeks around here. We've also got this one here as well. So to be honest, if anyone's in dollar CAD longs, I'd be holding until 1.44939. Really, I think you're pretty set. Oh, it's a bit frustrating. I've got a little bit of FOMO on that. James Bond is only J Powell. I'd hate to be J Powell. I would absolutely hate it. Can you imagine the pressure that he's under? Okay, I think my mic unplugged there. Hopefully you can still hear me. Can you imagine the pressure that J Powell is under? Like, even with the speeches, trying not to give too much hints or signals and all that sort of stuff. It could never be me. I talk way too much for that. I once applied for a job with MI5 and was told that I look too distinctive. Too distinctive. They want ordinary looking people as they tend to go under the radar, perfect for world of espionage. I mean, yeah, that's true, but I'm not sure if I'd be happy with someone saying I look distinctive. Ball out, gold buys. All right, you always provide a good signal. Let's have a look. Whether you agree or not, it's always interesting to see what you're saying. For me, there's nothing here. The weekly, last week's weekly candle had no momentum. This week looks a little bit bearish. We've come back into this consolidation zone here after a very brief breakout. Yeah, I mean, to be honest, I would lean more towards going long if I had to take a trade, but there's nothing there for me. No, I know it's not. I know it's not a signal. I'm only joking. Matthew, apparently Trump has said he's not going to get rid of Powell. He's going to let Powell do his term. So at least there's some sort of stability within the Fed. If you were to battle rap any trader, who would it be? That's a good question. I don't know. I can't rap to save my life. It would probably be one of these gurus. At least then I could write some funny lines into it and actually mean them. But you know, if it was someone against Nick, what am I going to say? What am I going to say to Nick? It's like, what could you possibly say? Whereas if it was someone else, you could be like, you could probably rip them apart, really. Imagine instead of Jay Powell, our president gives speech. Well, I wouldn't want Trump making the Fed speech. I think that would be a bit messy. See, I wouldn't do ICT either. He's got such a cult following. I'd probably get assassinated. Nice jawline. I'm going to hope you're not being sarcastic because I need a haircut. And once my beard is shaped up, I do have a nice jawline. But right now, not quite. Trump can't get rid of Powell. Neither will JP resign. Yeah, I think we're stable with Jay Powell in his chair for now until his term is up, and then it'll be interesting to see who takes his place. But yeah, dollar. The dollar is fighting its ground. Seems like we did see selling pressure coming at 107. However, the bulls are putting up a fight. We are seeing the daily candle show some bullish momentum, but it's not really enough. We're seeing very flat candles, really. Joe Biden coming and falling and announcing rate hike instead of cut. Yeah, that would be a very interesting time in the markets, actually, if we could see Biden start to move markets. I think the markets would actually look a bit more like a heart rate monitor than a currency chart. James, where are you from? The UK. Does Fed terms work like president terms? 4 years. Wonga, I'm actually not sure. Let me have a quick look. Actually, you know what? No, someone Google that, please. Wonga, could you Google it and let me know? Because I actually can't give you an answer to that one. It probably is, but yeah, I'm not 100% sure. He's a UK person, but don't tell him. Yeah, I'm a very ungrateful UK person. Anyway, I'm tempted to go short euro dollar. I'm not going to, obviously, I've already said I'm done for the year. I need to stick to my word, but I do quite like where it is here to go short for a very short-term trade. Are you a day trader or a swing trader? You know what? If you asked me that a couple of weeks ago, I would have said swing trader. But over the past month or so, it's been mainly day trading. So I'd say a mix, but primarily day trading these days. By law, the president nominates Fed chair and 2 vice presidents every 4 terms. Okay, that makes sense. To be honest, I'd just keep Jay Powell in. I think he's done a pretty good job. Paper trading? Nah. Paper trading. Nah. I've never understood that when people are in, either sitting out of the markets or whatever, and they go into a demo account, take the trade. I just don't see any benefit to that. Whether it wins or loses, it's like, who cares? I'm too grown for paper trading these days. Quite happy to just sit out. And hold on, this happened last time. I need to move my plugs. Give me a second. Oh, it's not turning back on. Hold on, guys. Technical difficulty. Okay, should be back in a second. Okay, we're back. All right, let me see what I've missed here. Been holding EU short since NFP wick. High starting to get tired of holding it. Damarion, I wouldn't get sick of holding it. Trust me, when or if we hit parity, that'll be an amazing trade. And you'll look back and you're like, oh, thank God I held. But obviously manage your risk. Don't be silly and just hold with a huge stop loss and wait. Trail stops, really, to be honest. I think that's probably the best approach if you're already in the shorts. You rely on fundamentals or TA. Fundamentals, really, I don't pay attention to much technicals. If I am using technicals, it's just a fib. There's nothing. Okay, hold on. I'm just going to move my monitor over. It's playing games. Give me a second. Please check gold. Okay, give me a sec. Let me just sort out my wires because something's going on here. Okay, we're back. Apologies. That's on my to-do list, actually. After the stream, I need to sort my wires out so I can stop kicking them. Okay, so... Oh, it helps your itchy fingers. That makes sense, actually. I understand that. I don't really get itchy fingers, to be honest. It's... yeah, I'm quite happy to just sit and do nothing. Can you also check AU? Legend Gaming, I'm going to get to gold, but if you type it one more time, I'm going to not do it. I need to reopen TradingView. Give me a second. Okay, so Australian dollar and gold. Demo is probably good to forward test those who want to get into fundamental analysis because apparently it's not easy to backtest fundamentals. Yeah, backtesting fundamentals can be done. It's just a very painful process because you've got to go to something like Fred or Edgefinder and find all the dates and try not to look at what's going to happen, and obviously go in the charts and do it over and over and over. It's just such a painful process. But generally speaking, you don't need to backtest fundamentals because once you understand how it all slots together and what it means for the economy, you've basically got the direction of the currency. So excuse me, yeah, backtesting fundamentals is not essential, to be honest. I think backtesting is better for refining your entries, getting times and understanding patterns and all that sort of stuff. But anyway, let's move on. Australian dollar. Oh, it's happened. I think I said this, was it Tuesday? Oh, it is Tuesday. I said this last week then. I was looking for the break of this support, which has happened. I think we're going to go lower, to be honest. I don't see any reason that we wouldn't. We've broken quite a major level of support here, especially on this weekly. If we look, we've had rejection, 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 finally broken below. So I'd now be looking for some sort of retest of this structure. So I'd like to see slightly lower price and then the pullback, and this would then be the entry point. The problem is I've been saying this with all of the dollar pairs, New Zealand dollar, pound dollar, euro dollar. I've been waiting for these pullbacks and just not happening, which is what led me to DCAing in the first place. So, I'm going to say this very loosely, but maybe even going short now possibly isn't an awful idea. But again, I'm not doing that. It's just a rough idea. Okay, we'll go gold, seeing as someone's very desperate for it. There's nothing here. There is absolutely nothing to do on gold, in my opinion. There is no technical setup. There's no fundamentals really driving it either way. It's pretty flat. Weekly candle. Last week's candle. Serious lack of momentum either way. This week's candle currently is bearish. So yeah, there's nothing there that makes me want to go into it. Natural gas. Again, actually, I've got no idea about natural gas. What are these lines here? I'm not sure what these lines are. Either way, again, we'll just use technicals because I'm not really a natural gas trader. I'll trade it if there's something super obvious or something notable has happened, but generally speaking, it's not an asset of my choice. I think now we've got a very key decision. Either the market rejects this support, as it already has done before, or we break below again. We look for a retest here and we continue lower to the next support, which would be around this level here at sort of 267, roughly, something like that. I just think fundamentals are not made for day trading, as it gives you overall direction. So I think it's better for swing traders. PS fundamentals are the base, obviously. Yeah, so the way I use fundamentals for day trading is kind of loosely, which is why actually my fundamental knowledge has actually been quite lacking over the past couple of weeks, really, because I don't need to know every aspect of every currency when I'm day trading normally. So actually now is a great example. My only focus since September has been euro dollar shorts. So that's all I've been paying attention to. So I know what's going on in the Eurozone. I know what's going on with the dollar, but everything else, pound, the Swiss, the yen, well, maybe not the yen, but the pound, the Swiss, everything else, it's just not my concern. I just really don't care because I've been making good returns of euro dollar. It's, like I've been saying, it's a no-brainer trade. But the only reason I got to that conclusion and I managed to make the returns I did was by understanding the fundamentals. So being able to hold through relatively large drawdowns and say, okay, I'm still, 99% confident this market can move lower because there's nothing to support it. So that's essentially it. It's giving you that bias and giving you that ability to hold a trade, even if you're in drawdown, and giving you that, the direction to go in for the trade in the first place. What do you think about BRICS banning dollar? No idea, to be honest. Didn't even know that was a thing. I don't think it'd be a huge deal. Zorro, you lost again. I've got no idea what you two are talking about. Either way, anyway. What's going on with Bitcoin? Still moving higher. That's interesting. I really thought we were going to have some sort of sell-off at 100k, which I suppose we did very briefly. We had a very slight move to the downside. It wasn't anything major. Oh, that's not what I want. I wanted this. We had a very slight move down, but I really expected a huge profit-taking dip on Bitcoin, which didn't come, which is a little bit surprising, actually. But I guess the crypto bros have got diamond hands. But yeah, I think, to be honest, seeing as Bitcoin's managed to hold above 100k, and we're not really seeing any signs of a huge sell-off or anything like that, I wouldn't mind buying the next dip. So if we do have a dip, maybe even just to retest 100k, I'd be quite happy to buy, to be honest, and going for a long position. Melee turned Argentina around, now out of recession. Good stuff. Have you guys seen the president of Salvador, or El Salvador? A guy's been day trading his country's GDP. I'm not really joking. He's got like 600 million in a Bitcoin wallet. And that's essentially the whole country's GDP. It's quite interesting, really. It's quite funny, quite a funny thing to watch. What times we live in, where you can just put all your country's money into a Bitcoin wallet and sit on it. Some ETH and Sol too. Yeah. I think one of my biggest regrets actually is not being more involved with crypto. I think it's easy to say in hindsight, but at the time when Bitcoin was like first coming out, I was still playing Modern Warfare 2 on my PlayStation. I had no idea what Bitcoin was, or I didn't even know what Forex was. And then by the time it started getting a little bit more public, I didn't really have any money to put into Bitcoin or anything. And now I'm at the point where I've kind of just missed it all. So there we go. There's always another project in crypto. Sean, every time I invest in crypto, I lose money. And I'm saying that because it's always meme coins. I'm always sat there. It'll be like a Saturday morning or a Saturday afternoon. I'll be sat on the charts, just doing what I do, preparing for the week ahead. I'll go on to something like Pump Fun or Deck Screener. I'll see something that's just gone up 1,000,000% in the past 24 hours. I'll be like, all I need is just one of those, and I'll be pretty chilling, really. So I'll go in and have a look. I'll put $100 in, and it's gone within an hour. Get rope pulled every time. But obviously, I know that's why it's only $100. Don't really care. It's more just for a little gamble. USD CHF long is a good or bad trade. Actually, I'll look on this chart. It's my short-term chart. Actually does look pretty nice to go long. We're seeing rejection on the hourly. We're seeing this candle about to close with a wick to the downside. We're seeing some bulls come back into this market. The 15 minutes rejected. The 50 moving average price opened above our daily pivot level. So yeah, to be honest, actually, it doesn't look too bad. I wouldn't mind if I was going to go long something like this. I think that would be sort of the setup I'd go for. Yeah, crypto is not my thing. Thing is, I was looking at my Coinbase wallet, and I've had so many transactions in Bitcoin. If I just held them all in there, they'd have been worth like quadruple, maybe even more. But anyway, moving on. USD CAD. What would be a good entry for you to enter long USD CAD? Any sort of pullback, to be honest. Literally any pullback would be good in my book. The issue is I'm just very unwilling to open any new trades right now because we're basically at Christmas. We've got less than 10 days. So liquidity, volatility in the market is just going to only get lower from now until basically next year. So sort of the second week of January is when I'll start coming back to the markets and looking for new trades. But from now until then, I just don't really see any worthwhile opportunities to put money on the line for. But yeah, if we could get a pullback USD card, something anywhere really would be fine as far as I'm concerned. Flat into BTC, BTC goes up, BTC flows, alts, 4-year crash, rinse and repeat. Sean, you speak in hieroglyphics to me, buddy. No hacker. I'll be honest, that was actually really weak analysis. I'm sorry. I didn't really give you any attention now. My bad. So I'll give you another rundown in a bit more detail. USD CAD, what would we do here? Really want to look for what is the previous structure. Previous structure to me is these previous highs we've got sort of around here. So yeah, some sort of pullback into any, it could be this one, could be here, or it could be down here. Completely fine with me. I'd be happy to go long on this first one. Stop loss just above, just at these lows down here, and I take profit at, well, I guess there isn't really a take profit level. So what I would do for a take profit really is just trail stops. I'd have a take profit all the way up at these previous highs. So at 1.466, and while the market moves, I would just trail my stops to trail price. But other than that, it's kind of all there is. The market's just on a rampage. Yeah, these markets are doing so well. NASDAQ, S&P. Well, actually, the S&P, not so much. It's taken a little bit of a hit. It's kind of range bound in this, which isn't great. I kind of expected more of a run towards 2025. I think there's still a slight chance we could go higher. But it's a case of, are we just going to see some sort of correction in the new year before we go higher in 2025? I think it's possible. And that's not really based on anything, I'll be honest. It's just a gut feeling. So we'll see. So yeah, not looking to trade the S&P. I was long. I cut profits quite early on that one, which in hindsight, I did quite well doing that. NASDAQ's doing very, very well. The Nikkei isn't doing anything really. Again, just very sideways ranging. The DAX, I've been looking to go short on the DAX actually. I've not done it, but I think there is potential. So the reason roughly is the move that we saw, this really strong bullish move, was basically just a earnings driven move. But if we look at the overall health of the Eurozone, it's not doing very well. And we are at the top of this ascending channel as well. So I think, maybe it's rare for me to go short on an indice, but I think in this situation, it might be worth a shot. I'm not going to, again, I'm wrapping up for Christmas. I don't want to open new positions, but I'm just saying that if I was still active in the markets, I would probably take this. Thoughts on pound Australian. We've already covered pound Australian, but there's not too much there. There is a head and shoulder. Actually, I'll just pull it up, it's a bit easier. Yeah, I'm just looking at this potential head and shoulders setup that we've got. I don't really trade these types of patterns, but overall to me, it looks like it does have possibilities to go lower. It might even just be a pullback into support before we go higher. But yeah, generally speaking, I don't have much for this. We've also got the RSI that's quite overbought, so I think a pullback's due. James, what's the most exotic pair you've traded? Nothing too exciting, really. I think probably dollar Mexican peso is really as far as I've gone, but even that's not really that exotic, is it? But yeah, I don't trade really that much. I stick to sort of the G10 currencies generally. Hey James, I'm just tuning in. Any analysis on today's retail sales and your present sentiment on the dollar? I'll be honest, I've not even checked retail sales. Completely forgot that came out. Let's see. Where was it? Retail sales was here. Actually, let me just filter this so I can see it a bit easier. So retail sales month on month jumped up. Core retail sales actually was about the same. It didn't meet forecast, but it's not a huge detriment in my opinion. So this is actually quite positive. I mean, it's mixed, but I would lean more towards the positive side. So definitely not too bad for the dollar. In general terms for the US dollar, I'm still quite bullish. I don't really see anything that's weighing down the dollar too much. I mean, there's obviously positives and negatives, but I think overall, the sentiment for the dollar, the overall or the broader data for the dollar is still quite bullish. So I'm just looking for this closure above 107, maybe a retest if we get that, and then a move up to 110. That's what I expect to happen. But whether it will happen, I don't know. What we also need to account for is the historical moves on dollar at this period. So if we look on, oh no, I just realized I removed all my drawings or annotations and things. But generally, after an election, we have anywhere from a 2 to sort of 5% rally. That could be either way. It could be bullish or bearish. But then following, we have a complete reversal, and it's normally double or triple. So since Trump was elected, when was he elected? I think it was around here, wasn't it? Or was it here? I think it was here. I could be wrong, so don't quote me. I'm just, again, going off the top of my head. So we had a total of a 4.3% move. Now, last time in 2016, when Trump was in, we had, I think it was around a 5.5% move to the upside, followed by a 14.5% decline to the downside. So I'm just a little bit, obviously, I'm not saying that's going to happen. It depends on what the economics are saying and, you know, what's going on in the world and things. But I'm just saying that it's something I just want to be aware of and very cautious of. But if that doesn't happen, I think 110 is completely fine, really, to target. What's your thoughts on US 30? 8 consecutive losing days, room for the upside until December, better opportunity in January. My gut feeling tells me we are due a pullback on US 30. I think we are quite oversold. But I also have another gut feeling that tells me that this isn't a good time to buy. You don't want to buy a falling knife. The Dow Jones also isn't on the edge finder, which tells me already I'm not really bothered about going into this market for a long or a short. In fact, we do have a support level here. We've also got the RSI on the H4 that's very oversold. So it tells me that we are due some sort of pullback, but it might just be something very small, something just like this before we head lower. Or, you know, on the other hand, we could see a complete reversal, take out previous highs and go continue up. So that's ow, I just burned myself. But yeah, that really is it. I don't see anything worthwhile trading on the Dow. It's too late to go in for shorts. I think it's too early to go in for longs. If we start seeing some sort of bullish movement, something to tell us that this market is ready to start pulling back, maybe you could take a long. But yeah, that's it. Will quantum computing have on various technology sectors, blockchain and cyber tech? I've heard things about quantum computing destroying the Bitcoin market. I'm not sure in a good way or bad way, no idea. But obviously, Bitcoin is mined by basically solving problems. So a quantum computer can do it, 1,000 times, I think even more, like a million times faster than our normal computers can. Then yeah, I think the supply is going to get drained pretty quickly. But obviously not available. You can't get a quantum computer, so I don't really see how realistic that is in the short term anyway. Maybe in the next 20 years, maybe we'll be looking at it a bit differently, but for now, not much. What are your thoughts on gold, pound, dollar? Gold, I'm not going to do gold again. I'm sorry, but there's just nothing to do. There's literally nothing to look at on gold. As for pound, dollar, same thing I was saying earlier. I think there's still room to go to the downside. With now, well, likely this is going to be the next lower high from our previous high here, created a lower low, obviously relative to the previous low. So it makes sense to go low. Dollar, I'm still in favor of bullish dollar. In terms of the pound, I think it's relatively stable. However, again, looking at it in a relative view compared to the US dollar, I think we are likely to see further downside. If they cut rates by 0.25, can we still have the same bullish outlook on the dollar? Dim, yes. 25 basis point cuts already priced in. No big deal if it does come. Would you look at NQ? Yes, we can look at NASDAQ. Problem is with NAS, there's nowhere really to buy. It's very extended. The pullbacks that we're having are very minor. So I think the only pullback I would have been willing to buy into is possibly this one. But yeah, it's difficult because I think we are going to go higher on NASDAQ. I don't really see any reason we wouldn't. It's just a case of trying to get an entry. You're buying very, very high, which I don't like to do. So yeah, my opinion on NASDAQ is more of a just sit out. You've missed the run. Although obviously if you can find an entry, I would be looking to go long. Yeah, so 25 basis point cut, it's really expected. It's not going to be a shock. If we get a hold, that would be quite a bullish sign, I would imagine. But yeah, when we get the cut, it's not really going to be or very unlikely will be a case where we start seeing dollar start to take a slip to the downside. Along with the Fed, it seems they're quite happy to slow down rate cuts. So the environment for the dollar seems quite positive, really. Yeah, long when Nvidia starts to reverse. Yes, possibly. I don't even look at Nvidia, to be honest. Oh yeah, Nvidia's taking a slide as well, hasn't it? Let's see what the facts are, actually, because I've got no idea what's going on with Nvidia. Stocks fell 4% in 2 days. Nvidia has begun full-scale production of its Blackwell GPUs. Nvidia Corporation became the first chip maker to achieve market capitalization of $1 trillion. $1 trillion. Crazy. Let's see. I think now actually is a likely time where we might see a reversal here. I think the technicals look very strong. Obviously, we've got an ascending trend line, previous levels of structure through here. But again, obviously, it really depends on what's actually driving the market. We do have the RSI that's a little bit oversold, so it wouldn't surprise me if we do start to see some sort of upside here on NVIDIA. JPY pairs dipping. Slightly. Yeah, I'm very mixed on the yen. I was bearish. Now I was bearish. Went to bullish. Now I'm kind of just neutral. I just need to see what the Bank of Japan's going to do. I need to see if they're going to hike rates or hold rates. If they hold rates, I'll be pretty sure they'll hike rates in the following rate decision. However, if they hike, I'll be pretty neutral. I think it's obviously bullish for the yen, but it's not something I'm going to trade into. Nvidia is going to be hurt due to the rare mineral battle overseas. Interesting. Yeah, possibly. Well, likely. Dollar Swiss, I think really all the dollar pairs are pretty similar. If it's dollar XXX, then buy it. If it's XXX dollar, then sell it. It's very straightforward in my opinion at the moment. See what euro dollar's doing. Yeah, not too much. Okay. Yen's actually gaining some strength here. Euro continuing to move to the downside, really. The pound is gaining some strength. The dollar, again, hasn't really done much since we last looked. Euro pound taking a bit of a dive again, continuing to push his Bollinger Band lower and lower. Similar thing with euro dollar. US dollar CAD is completely broken out. Dollar NOK. Actually, how long has this been? Date range. 62 days. Dollar NOK has just been essentially ranging, which is kind of crazy. 62 days. I was short. I think I've taken 3 short positions on dollar NOK over the past 2 months, maybe. And I've closed all 3 in profit, but it wasn't anything significant. It was all basically break-even profit. Just because obviously it just wasn't doing anything. So, yeah, sad stuff. I think, correct me if I'm wrong, but because Trump is talking about China tariffs, China are going to charge more for exporting their rare metals. Matthew, from what I understand with tariffs, it's not the exporter that has to pay, it's the importer. So, for example, let's say you were in China, I was in America, you were sending me silver or, whatever it may be. You're not the one paying the tariff, I am. And again, I'm not 100% sure, but I'm fairly certain that's how it works. So it will hurt Chinese business in the fact that people will be more put off buying from there and want to obviously source things closer from in America. But stay bullish on USD CAD due to the strike. Yeah, I think USD CAD easily going to continue higher. I think actually now we might be due for a little pullback, but nothing major. I think actually after this pullback, if we can see a slightly lower price, it might be quite a good time to buy. That still means an increase in price for goods. Yeah, absolutely, which is why it will still hurt. But it will hurt the consumer, or well, it'll hurt the importer more. Obviously, they're the ones paying it, which obviously then in turn puts them off importing from China. So it all has the same effect, essentially. It doesn't matter if it's China paying it or if it's the importer paying it. Well, I guess it kind of does, but, we're going into pedantics there. Cool, good stuff. I'm glad we could clear up the tariffs. What reports are coming out today? I think we're done for today. Let me just refresh and make sure. What time is it? So we've got crude oil inventories coming out. We've actually got... Oh, wait, sorry, that's tomorrow. Yeah, we're done for today on the dollar anyway. So, yeah, today's completely done. Tomorrow, we've got CPI for the UK. Crude oil inventories for the dollar. We've also got FOMC. GDP for New Zealand. So, yeah, tomorrow will be quite busy, mainly for the dollar. So make sure you've protected your positions. I mean, I don't really foresee a situation where the dollar's going to start going too crazy. Again, the rate cut's already priced in. It's very, very expected. The main situation will be dollar strength if they decide to hold. Which over the long term the Fed will take as inflationary, which could affect interest rates. Possible. Slippery soap stuff. It is. The thing is with economics, if you go into them enough, everything is, if this happens, this is going to happen, this is going to happen. If that happens, this is going to happen. And you end up in this, it's like analysis paralysis. It can be quite difficult if you start looking into them too much, which is why I don't really do that, actually. I keep my analysis as streamlined as possible. So, if, let's say, GDP's been dropping for the past 3-4 months, unemployment's rising for the past 6 months, and things are starting to build up, cool, I'm going to trade it. I don't really pay too much attention to what that affects in turn. Obviously I do, but the whole point of what I'm trying to say is I don't look into it with a microscope, because otherwise I'll just get confused. Anyway, guys, my time is up. Chris is here to take over, so don't leave. I'm sure there'll be a quick break. Thank you very much for joining me. I hope you have a great rest of the week. I'm sure I'll see you very soon. See you later.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. Happy Tuesday. How we doing? Taking a look at the markets today. Interesting price action with the futures market. We had a huge gap up in S&P futures and NASDAQ futures. I was actually looking to see if I could fade that. I just thought, we got the Fed tomorrow. I don't know what's really going to happen. So I did this instead. I'm going to add in, and look, in my Pulver alerts, I've had several new alerts go out that have been hedges. If you're in my Pulver alerts, you check the index positions. So I put in a new trade on the QQQ for January, a new trade on the SPY for January. Today, I'm looking at an even cheaper one. I'm just going to go index. It's really simple. I'm going to add this in right now. New trade, SPY for the 31st, 350 put. I paid 11 cents debit. This is a hedge. If price on the SPY falls somewhat quickly, this cheap, out of the money put can pay 50 cents to $1 credit for a nice gain. This is part of my ongoing small hedge plays for bigger payouts. Okay, so it's not even a level that I'd say we're going after. It's more just taking advantage of the inexpensive options chain. So I'm putting that in the Pulver alerts right now. I added that in this morning. It was 11 cents on that debit. I bought enough contracts where if it pays me, 50 cents or $1, it's worth it. It offsets my portfolio by about $10,000 to $20,000, depending on the movement of the underlying. But it was weird to see, this gap up right around, 4:45 to 6 p.m. That's always kind of that futures hour. There's no trading, but we had this huge gap up. So the first thing I did is I wanted to see, well, hey, does that translate into the S&P? Nope. We were trading like $2 lower today on the SPY pre-market. We're lower on the Qs today. We are continuing a gap lower down to the 50 moving average on the Dow. This has been one of the worst streaks since the 80s on the Dow. The RSP, which is equal weighted S&P, this is now 11 going on potentially 12 candles in a row. Again, just showing like this market is not market breadth. This is concentrated with large cap market weight and Mag 7, throw in Broadcom, Mag 8, I guess, whatever you want to call it now, all your $1 trillion companies. We've got equal weighted down, 11 days in a row. So if this finishes red today, that could be 12. Is this a bad thing? No, I mean, I'm still looking at, so I have some exposure here. If we come back to the 200 moving average, I'm going to buy some more here, And so if equal weight is going lower, I do wonder, does that ultimately drag the SPY down? Because I don't think we can have the SPY going up and equal weighted going down and not have there be some type of reversion. Either the equal weight starts to catch back up, or the the market cap weighted like the SPY will start to center and come back down. Okay. All right. Let's have a look at everything else. Bitcoin's up to 107 right now. I was actually taking a look at, I used to have some GBTC, that grayscale Bitcoin, and I just saw they're offering BTC. So it's like grayscale mini, and they lowered their expense ratio quite a bit. So, I don't love the way this one looks. There's obviously not a lot of price history. It doesn't look at all like Bitcoin, but this actually is through Grayscale owning Bitcoin with an expense ratio that is way cheaper. So a 0.15 expense ratio, if you take a look at IBIT, which is BlackRock, which is obviously widely adopted, their expense ratio is 0.12. And this chart looks an awful lot like Bitcoin. So either way, just considering some more diversification, it's obviously cheaper. BlackRock $60, Fidelity's in the 80s. Bitcoin itself is 107, but you can dollar cost average whatever you want with your wallets. So MicroStrategy, I just read that Michael Saylor bought another 15,000 Bitcoin, or like MicroStrategy bought another 15,000 Bitcoin valued at like $1.5 billion last week. So they're continuing just to add to their hoarding of Bitcoin. And we're at 106. We've got MicroStrategy at 392. I'm kind of interested. Actually, you know what? I think I'm going to throw in, well, we'll see how volatile MicroStrategy is. If this is high, low, lower, high, lower, low, let me measure that just in case. I'm going to measure this move and possibly have a couple of small dollar cost average levels in. But let me go ahead and box this in real quick. So if I take a box, start from the high. So high to low. And then project that right here. So symmetry back to him on 240. If I take, let's say, $1,000 right now, and then another $1,000 down here, I'm okay sitting on that. Now, expect a lot of volatility, right? I mean, could this come all the way back down to $200? Could this ultimately be declared like, oh, MicroStrategy is too much like Bitcoin, and it's I don't know. It's all speculation, but it's risk capital. So, but because this is trading as kind of this like front running proxy to Bitcoin. We're at 106, 107. We're hitting some symmetry on Bitcoin. I think if we have a pullback, it would make some sense. If I put a small dollar cost average in level there, so I put 1K in, I put another 1,000 in, that gives me a break even there at 2K. Can we get back to the highs? And let me just do some percentages here. So let's say I get a dollar cost average level there, and it goes up 70%. Okay, so I can turn a $2,000 investment into, a $1,000 profit. That's pretty good. So I don't mind that. I don't mind that at all, actually. Let me see if I can get lucky on, you know what? I'd like to throw $1,000 at it, but I'm going to go ahead and pick a price point. I'm going to go 372.50. How many shares can I get? Not very many, but $1,000, 372.50. I'm going to go 3 shares. Okay, so 3 shares of MSTR. Let's go positions, trade, going long stock, going 3 shares for a dollar cost average, and 372.50. See if I can pick up a level there. And that would put me out $1,100. That's fine. Okay. So I'll toss a little bit out there. 372.50 pending. I'm going to put this in for all my accounts. I'll throw this out for a pulver alert as well. Okay, just give me a second here to get all these filled, or pending rather. Okay, almost there. All right, so that is pending. Stocks options, this will be new trade, MSTR, $1,000 buy-in at 372.50. 3 total shares. I guess it's technically an $1,100 allocation. And the other level I would put that in at is around 240. And how many shares can I get for that? If I put another $1,100 at 240, I'll go 241. I get 4.5, 4 to 5 shares. This is a dollar cost averaging for BTC exposure through MSTR. Michael Saylor continues to buy BTC, and the stock itself has traded on the positives and negatives of BTC volatility. If MSTR hits 1,000 per share, I'll be happy. Okay, so let me add in the 372 level. 372.50 is right in here. And symmetry around 241, right in there. So 372 to ups. 372.50 and 241. All right, take a screenshot of that. Okay, that's going in Pulver Alerts for the Discord. Sending now. All right, that's MSTR. So a little bit of action there. If we get filled, great. Let me set a chart alarm. Move this one up to 372.50. Level 1 for MSTR buying, just so I know. Okay, so we got some of that. I was looking at doing it's a zebra spread. That's a real thing on BTC, that Grayscale Mini, but I don't really have enough price history on it, so I don't know. Actually, it wouldn't be terrible. But it's going to cost me like $2,700, so that's why I'm not doing the trade right now. I'll pick like the little $1,000 increments and take my stabs between IBIT, FBTC, MicroStrategy, Coin, plus my Coinbase wallet. I've got enough exposure for right now. I have it in my personal accounts. I have it in my retirement accounts. I've got dollar cost averaging going into a wallet as well. So there's some exposure there. It's been a pretty good year on old crypto. Anyway, let's talk other stuff. So S&P, where are we at? We're sitting here with a, these are the levels I keep talking about. Okay, so you want to write these down. So SPY would be the equivalent of roughly 608, 609, 610, and 602, 601, and 600. I think we are dealing with some market maker levels that are going to keep prices contained until we have the Fed coming out tomorrow. Okay, so tomorrow afternoon, 2 p.m. Eastern time, rate decision, which is all pretty much priced in. The Fed's going to cut rates another 25 basis points. Two things that are really important. In my live session yesterday, let me show you this. I talked about this in my live session yesterday at 3 p.m. So I did a YouTube session. I put together some visuals. This actually, I pulled these from a podcast that I listened to this weekend that I thought was really interesting. I just expressed yesterday like how high sentiment was and how bullish everyone is. That everyone is pretty much just crowded to the boat of we're bullish. Everyone's bullish, and so man, I'd like to see a little bit of a pullback. I'd like to see a little bit of a shakeout. I'd like to see some portfolio rebalancing. We may not get it. It may not be until like February, March, April, May. I don't know. It might be end of the year. The Fed might do something to break the market down. I have no clue. But I'm going to keep taking my cheap inexpensive edge plays just because. And but we are sitting here at sentiment levels we haven't seen since the 80s. We're looking at Warren Buffett loading up on cash when, look, it's not like the timing is perfect for Warren Buffett ever, but the guy raised cash right before the dot-com bubble. This is Berkshire Hathaway's cash allocation as a percentage of assets, and it's never been the highest ever, which is nuts. So Berkshire Hathaway raised cash years before the dot-com bubble. They raised cash years before the financial crisis, and they're at the highest level of cash allocation or percentage on hand ever in the history of that company. So Buffett is fearful while others are greedy. You know the saying. The timing could be, 12 to 24 to 36 months off. But at some point, I'm sure, look, Buffett's 94. If the guy's around for another 3 years to see another crisis, he's probably going to be happy they saved cash. If I do wonder what happens to Berkshire Hathaway if he passes away. I don't know. I'm sure their methodology and their philosophy on investing and value investing, I'm sure it's okay. But if all of a sudden he passes away and they're like Berkshire Hathaway crazy into Bitcoin, that would be that'd be an interesting switch. Anyway, but he's raising cash like crazy. Here is leverage ETFs. We're getting up near these levels we saw back in 2021. Which I don't think is a mistake that everyone was levered up on ETFs and we had a top in late 2021. So we're kind of matching those levels now. Sentiment stretched to the highest levels we've seen in the last 12 months. Futures positions higher than where we were back in 2021. Leverage ETF bets are higher than they were back in 2021 and 2022. Risk appetite is pegged to these 100th percentile levels in a Goldman Sachs sentiment survey. Everyone is crazy exposed to stocks right now. Mutual funds are highly correlated to the S&P, and they're also, super, super bullish. Retail sentiment is ridiculously bullish. Like this is going back to 1990, and it is parabolically higher and more aggressive on speculative positioning. So you got a retail crowd that is just dumping money into these markets, and again, you dump money in, there's clearly like a melt up effect, and that's what we've seen since the election. But I just don't know how sustainable this is. And that retail traders typically, when they get in late, they're left holding the bag. Now, it may not be like a crisis, it may not be like a crazy bear market, but it hopefully is going to be some type of healthy shakeout. I keep saying 3, 5, 7, 10% corrections. Again, sentiment levels highest since the 80s. Risk appetite coming like crazy. So anyway, that's where we're at. All right. And to what degree? I made a little claim yesterday in the SPY up here. I said we will likely find this 200 moving average. So if I zoom my chart out, I think we're going to find this 200 moving average before we hit 10% higher. So from yesterday's timestamp, this is 10% higher. And this is roughly a 10% correction. Now, if price goes nowhere, right? Let's say price goes sideways, okay? And this allows all my moving averages to catch up. Well, there could still be some dynamic support in here, and the market tries to eke out some gains, but we're now stretching into like the 280s or 290s on the bar count. I would not be surprised if we find this moving average, whether it's like sideways or maybe a little bit down, to find some support and then get back to these highs before we hit another overstretched melt up another 10% up. So, and I think, look, if the S&P can't go any higher, I don't think the NASDAQ is going to continue to operate on its own island like it can't be stopped. That's what's weird about right now is like you're seeing all these odd correlations. You got S&P flat, NASDAQ up making all-time highs, Dow's down to one of the worst losing streaks we've seen since the 80s. RSP potentially facing, which is equal weighted S&P, 11 days in a row bearish, and today would be 12, and it might close the gap today to show a green candle, but it's not really looking great, right? Look at this. This is 12 candles in a row to the downside. Like, this has never been seen before. So are we representing, the broader markets well? Is it, nicely correlated? No, not at all. It's completely segregated and completely disconnected. So somehow the market's gonna have to figure out what, balance looks like. And if we're being led by equal weighted, it's gonna weigh. It's gonna weigh on the Mag 7. Mag 7 clearly can lift the SPY and the Qs higher as it's done. We see crazy amounts of order flows going into it. I mentioned yesterday in my live session, like 70+% of interactive broker flows this year have been pretty much Mag 7 related. Like, for their retail traders, everything going into their broker platform is 70% Mag 7. That is crazy high concentration. Yes, it's been working. I'm not saying that it's a stupid trade. It's a great trade. It's been killing it for a decade. But at some point, it's got to get, it's got to get some type of reality check. And I think we're close to that level where we've had, I think, 2 or 3 kind of windows of like broad market, broad market, broad market. And now it's not. It's like right back to 10 stocks carrying 490 stocks. Equal weight is crap on the QQQE. Equal weight on an RSP is crap. Russell is down. Dow is down. So interesting markets and interesting times. Here we are looking at, the SPY for the last 3 weeks. We have a high and low, and then we have a week that kind of traded inside that. We have a week right now. It is getting narrower. I mean, you gotta admit, like, getting a little bit narrower, having some equal lows in here doesn't mean this is a bear pattern. All right, doesn't mean this is a top. It just means that price right now is indecisive. Now, like I said, take this to the SPY, the 60, like 603, 602, 601, 600. I can see some bounces coming in there because that's previous resistance becoming support. If the bull market's going to stay intact, I think we have to bounce hard off of this, 600 level. We're currently trading on the SPY at 603. Okay. So does it bounce? Sure. Does the Fed save anything tomorrow? Maybe. If we're going to see all-time highs by the end of the year, we're probably going to have to see some Fed love. Jerome Powell says the right thing, or price action ultimately moves like he said something great. One thing you can notice for today is that we do have a gap to fill. And so if the market's coming back down here to 600 and we find that gap by the end of the week, I wouldn't be surprised. That could actually be a very cheap trade. Actually, I could go out of the money call. Is it cheap enough to go out 2-3 weeks and see if that gap gets filled by the end of the year? Obviously, it got to be dead wrong, and we could break below 600 or break below 60.18, which, if I go back to, not sure if it's on this chart, none of these charts. Maybe I didn't put it in here at all. I think I might have a screenshot of it still. Maybe, maybe not. Yeah, these levels. Nope. I don't have it. No, I've got too many screenshots. Doesn't matter. I was just calling out some levels like the SPY has to stay above 600 for me to kind of maintain a bullish push. This is the 21 moving average right there, previous high. If we bounce off that, okay, fine. If we break below 600, then we bring in this 50 moving average, which is around 590. I have a 608 by 590 running right now. Okay, so if we break below 600, we get to 590. That bear put spread can pay me $18 for what cost me $4. That's a pretty good hedge per contract. Okay, my QQQ, if that turns over, I did a fudge, I don't remember, 533 by 510. 533 by 510 cost me $5, I think, or less. It was like either $5 or $4.85, but it's offering me $23 of credit. So again, like, pretty good reward to risk if I'm right. So cheap hedges for right now. Melt up is fine, and I'll keep just fighting the good fight. Okay. But I do have a lot of cash at the ready. I'm waiting to deploy that cash at better levels. I'm trying to be patient. The one trade I'm interested in watching this week will be NVIDIA, which is also into correction territory. We're now crossing double digits from the highs. So NVIDIA is down about 16%. Okay. Now, you could argue 20% is a bear market, but that's mostly for the indexes, not for individual stocks. This had a crazy correction of 40+% back here, 35%. So 35% correction back in July to August. Now we're back to 16%. And like I said before, this is back on December 10th. NVIDIA hits the 200 moving average before it hits all-time highs. So I have a trade right now, this guy, that I'm willing to take the assignment. If price this week is below 130, then I'm going to take on 100 shares of NVIDIA, and I'm going to repair this thing with the intention of trying to get $5 to $10 per share. Now, I'm probably going to get that not necessarily by the price going up, but by me selling premium and selling calls and lowering my cost basis more aggressively. So obviously I'd like to make, $10 a share and make $1,000 and walk away and have an income trade, even if this thing goes sideways or goes down. So my goal is to try to lower the cost as much as I can, back down towards this 200 moving average, and then try to get out of the way for a nice little recovery. And then I can add some more premium to it and lower my cost basis. Maybe I can make more than $10 a share. But this is going to be a fun little income trade. I accept the challenge, even though it's going against me right now. I don't get assigned until end of week. So if price on Nvidia gets back above 130, then there's a sweet spot here. If we're greater than 130, okay, we're greater than 130, but we're less than 132, then I actually walk away with $4.57 credit per contract, because I'll keep $2 on the long put, and I will get the sell premium on the 130 and not get assigned. So that's my best case scenario right now for this trade. If we're below 130, then I'll keep the shares and I will repair it. So I'll put in repair. And then I'm just going to turn it into essentially a covered call strategy, and I'll lower my cost basis and try to make, I'm going to try to go after $10 a share. I can't scribble today, but I'm going to try to go after at least $10 a share and turn 100 shares into $1,000. Okay. Now, and I could make more. I mean, if I have 100 shares and we go from 123 back into the 135, 140 level, but point is if I own it at 125, I lower my cost basis to 120, we get back into 130 plus, I can always add like an in the money covered call and just work the numbers where it's like, okay, hey, I'm going to get, $14 net credit if it gets called away. Well, I'll make $1,400 on a, margin position that's going to cost me around $7,000. That's pretty good. If I make, let's say I make $1,000, $1,000 on $7,000 margin, it's 14% return in maybe 2 to 4 weeks. I take that, so not trying to be greedy, but if I can do a lot of repairs, and this is what a lot of my like ownership looks like. If I own it, flip it for, $500 to $1,000, that generally translates into about $10,000 in my portfolio. So for every, $10,000, if I do that, I don't know, 50 times in the year, 100 times in the year, like it's pretty simple. That's just a nice little income strategy. So, and then a lot of trades that never get assignment, and I just continue to grind some income trades without ever having to own the shares. But Nvidia, I'm gonna stay. I'm team Nvidia right now. It's still kind of the head start. I know there's going to be heavy amounts of competition moving forward. Is Nvidia's reign done? No. I mean, look, it's Mag 7. It's the leader of the semiconductors. I think that it's beat up for a little bit. I wish Jim Cramer would keep his mouth shut on it, because him saying like, don't touch it yet, maybe that means it's going to go up sooner than later. That guy is dead wrong. I don't know why they keep giving him a show. Actually, he should just go off air, not do Mad Money anymore. And maybe you'll be happier traders. But no offense, Jim Cramer, you're cool. But just nobody likes how you trade. Same thing with Kathy Wood. All right. Anyway, that's where we're at. So Tesla, I would love so same thing on MicroStrategy. I've got some dollar allocation levels on Tesla. I would like to see a pullback towards the 21, the 50, anything on Tesla. Doesn't mean I'm calling the top. Just means that I want to see if this pauses and pulls back. I'll look for some pullback levels to get in on Tesla. Look, I think that this is kind of staggering. I saw this in Opening Bell Daily today and Robinhood Snacks. I think like 80+% of this year's gains in Tesla came after the election. That is insane. Like the rip that this saw is completely abnormal. I mean, this thing spent like months and months and months building up a wedge, building and giving us nice technical patterns, and then just erupted through the election. And, we blew through those all-time highs. So yeah, let's see if we get a pullback. Something like that would be great. Let's see if we get a pullback towards, okay, we've got this big run from low, high, higher, low, higher, high. Can we get some type of pullback? Some type of like Fibonacci pullback, anything that would make some type of sense on the technical side. And if so, I'll get some dollar cost averages in Tesla. But I'm bullish on it overall. I mean, now that we blew through these highs and we didn't really stall at 415, then I could see Tesla, creeping up into the 500s in just momentum. I could see Tesla, with enough bullish momentum to get us up into, 600 plus. Wouldn't be surprised in a stock like this if we get back into $1,000+ before we see another split. Right? I mean, look, I know Tesla trades where it's not just the stock, right? It's not just the energy. It's not just the batteries. It's not just the disruption in the auto industry, but it's also Elon Musk. And like him or hate him, there is a lot of what Elon Musk gets for his own personal sentiment, and that trades very closely to what Tesla's given us. So the fact that that guy is like, 1 degree of separation essentially from the president of the United States in 2025, it's probably good for the company, right? And it might be a big thing for EVs. It might be a big thing for Tesla alone. I have no idea. I don't think there can be some type of exclusive thing where like Tesla just becomes like the greatest automaker in the world, because it's not. But it'll be interesting to see how price plays out and how much sentiment gets into it. But it is, I don't know, it's a little overbought. I will say that. So anyway, but look, a lot of traders have been happy, right? You've been long on Tesla. You've been freaking smoking it this year. And I saw an oldie but a goodie. This is an old Trading Battle shout out, but somebody was asking me like, what are my favorite picks for this year? And Tesla was one of my favorite picks because nobody liked it. When Tesla was trading down here in the 200s or sub $150, I was like, nobody likes Tesla, so I'm buying it, and that worked out pretty well. So anyway, it is what it is. All right, let's take a look at some other stuff. I got some currencies I'd like to review. A couple things I keep talking about. Watch your 10-year yield this week with the Fed, especially cutting rates. Just going to say it. If the Fed cuts rates on Wednesday, which they're probably going to do, and this thing goes higher above 4.5, that's not a good sign. Okay, we also have core PCE on Friday that's expected to print. I don't know if it came up in the calendar yet, but let's find out. Bloomberg calendar for this week. Friday should be core PCE. Wednesday is the Fed. Here's your 2:30. 2 p.m., 2:30 press conference. Okay, there's another 25 basis points cut. This is showing up as 4.25 to 4.5. That's going to be that window for U.S. rates. And then core PCE on Friday. I didn't see any forecast for it. Let's see if it shows anything for today. So this is Friday, 8:30 a.m. Retail sales for CAD, PCE still don't have. I mean, that's so weak. You can't get a freaking forecast on the calendar. I don't know if that's by design. I mean, you see like the month over month is forecasted. Okay, fine. That just means a higher price at 0.2%. Core PCE is the number that everyone's going to be watching for the core PCE year over year. What I read this weekend is 2.89 is going to be the forecast. So if it's printed previous at 2.8 and it goes up to 2.89 or 2.9, that means higher core PCE. That means higher PPI. That means higher CPI. What does that do to our 10-year rate? I don't know. Okay. Yeah, but I'm not looking for the month. I'm looking for month over month. I'm looking for year over year. Okay. All right. You want to see? Here's some numbers for you. Here's the last 4 years. We've been operating at 4+% inflation since 2020. This is what everyone feels. This is why inflation sucks. And the last 4 years, here's some numbers for you. Okay. Medical care is up 9+%. Apparel and clothing up 12%. Used cars up 17%. New cars 19.9%. Okay. Even though these have come down in recent months, here's the 4-year running total. This is why life feels more expensive. Used cars 17.4, new cars 19.9, food at home 22.9, shelter 24.2, food away from home 25%, electricity almost 30%, gas utilities almost 30%, transportation up 40%, home prices up 43% in the last 4 years, gasoline up 47.5, fuel oil up 50%, auto insurance up 61%. This is what we deal with. For the last 4 years, this is life getting more expensive. So don't tell us that inflation is coming down when it's not. Like, it might be softening or it might be going up at a slower pace, but it's not getting better. So all these measurements at some point, I don't care how much household equity people have. If there is a blip in the housing market where house prices start to come down because everyone that wants to sell is trying to or being forced to lower their prices, everyone wants to buy is not going to buy at high interest rates. You're going to see inactivity. You're going to see, residential construction numbers going down. That could be enough to also be one of the many things that would be piling into, like, how is this market going to have a correction? It could be a consumer, right? If the consumer is overstretched, which I believe they are, and this household equity that's been built up and the 401ks and all the all-time highs in the markets are all of a sudden starting to show signs of waning, it doesn't take much. I don't think you understand how fast a correction can happen. As much as we've had this great run for the last 2 years, think about it this way. Okay, look at the S&P, okay, over the last couple of years. So let's take this bottom and let's just say we have some wave structure here, all right? So if we go low to high, higher low to higher high, let's take this last stretch, this low to this high. Would anybody be surprised to see this market pull back? Let's just drag a Fibonacci on this. This is all hypothetical here. But if I take this last low to this last high, would anybody be surprised to see some type of, even if it's shallow, 23 to 30% pullback? Right? If it's the 23 to 30% Fibonacci retracement level, those pullback levels would be fine. They wouldn't do anything to damage this bull market, right? They'd still be dynamically supported on the daily time frame. But you got to wonder, like, where does this market pull back? And based on this low, this high, look at where my 200 moving average is on the daily chart. Like, I keep saying this, but I think we find that 200 moving average, right? So just saying, don't be surprised with as fast as we've gone up that we can have a shakeout. It doesn't mean it's the bear market. It doesn't mean it's the end of the bull market. It just means that it's just a dose of reality to kind of get people that, I don't know, don't deserve to be long and being proven right. It's the bull market geniuses that have like, I'm levered on this and I'll kill it. I can't ever lose. I expect to make 30% a year in my portfolio. It's that little slap in the face that those people need. And that's what the market usually is glad to offer. So just be ready for it, And going into the Fed this week, we'll see what we get. I continue to see a lot of market maker levels here in the low 600s that I think the market bounces off of, and here at the 608, 609, 610 level. But if we break below, okay. If we break above, okay. I don't know where price is going to go. I don't really care. If it goes down, I have hedges. If it goes up, that's easy. If it goes up, that's the melt up. May it continue until, it never pulls back. This market never pulls back. Easy. But if it goes down, I'm ready. Right? And how much am I risking? I don't know. Probably 0.5%. Right? 0.5% that could pay me, somewhere between, let's say, 2.5% in gains to maybe even 5% in gains. That would be a worthwhile hedge if I'm right. So I'll keep playing those. If we go higher, that's easy. But I'm telling you, tomorrow with the Fed, we should be watching, and we'll make reference to this tomorrow afternoon in our bonus session. I will be watching this. The 10-year yield has done the exact opposite of the Fed, right? So the Fed cuts, and what does this thing do? Go higher. The Fed sees higher inflation and cuts again, this goes higher. So if the Fed cuts again and this goes higher, this is another reason to be cautious in the first, 3 to 6 months of 2025. This was a breaking point for the market at 5%. Okay. Everything that fixes on 5 to 10-year borrowing, okay, mortgage rates, especially 5, 10, 20, 30 years, I mean, anything that's financed in the medium to long term is going to be based on a 10-year yield. Okay. So if this goes higher, how would you like to see that the Fed has cut 100 basis points and yet your borrowing cost on a house is now 1% higher? The Fed cuts 1% and your mortgage rate's 1% higher. Makes perfect sense, doesn't it? But that's what we're about to deal with. So keep an eye on this. On top of that, the 10-year and the 3-month is at the zero line, and this is officially disinverted. Every time this has happened for the last 40 plus years, it is borrowed time before we face a reality check. Okay, and that reality check is recession. But on a silver lining, the recessions that we've had in the markets don't necessarily always equate to lower stocks. Now, in this example, sitting at all-time highs with crazy amount of overextended sentiment, I would think that we're probably going to have a correction if we have a recession. If anybody is right, and I mean, we've had everyone for 2 years say, we're in a recession. It's apparently not a recession, doesn't really matter. But my point is, what does it look like? Is it a Main Street recession when Wall Street doesn't pay any attention to it? Yeah, maybe. I mean, Main Street's essentially felt a recession for 4 years with crap getting so much more expensive. I just rattled off those numbers. Everything is 10 to 40, 50, 56% more expensive. Auto insurance, 60% more expensive. Are you freaking kidding me, man? It's like $1,000 a month to have a car now. Like, car payments are financed at like 8+%. If you're leasing or you're buying a car, you're getting loans at like 8 to 10%. Your car insurance is 60% more expensive. You can get like a basic car. It's going to be like $1,000 a month. It's crazy. So anyway, whatever. Stuff to watch. I keep going back to this, but I guess I'll shout it enough. And at some point, I'll either be right or I'll just keep melting up with everyone else. I'm just not going to participate aggressively in the melt up. I'll say that. So maybe you make more money than I do in the interim. But if I'm on the sidelines with some hedges and they work out eventually, great. If I enjoy the melt up like everyone else, I'll enjoy the percent to the upside. So I'm trading it both ways. It's just, I don't want to be blindsided. I think a lot of people that are, just overextended, heavy amounts of leverage, this market can't go down. It's like, look, people jumping in that have been on the sidelines and jumping in post-election, not great timing. I mean, if you've been with us for the last 2 years, we've had a pretty good bull market, and typically like bull markets, yeah, they can last a while, but you don't see them go straight up forever. So I think people jumping in off the sidelines now are just a little bit late to timing this, but if they have a horizon of 5 or 10 years, they'll be fine. But it's just that like short-term reality check where they dump all this money in, they get over leveraged, and all of a sudden it's like, yeah, the market pulls back 5 to 10%. And it's just a little smell and salt just to make them wake up a second. All right, let's do this. There you go. Sarah says we have 2 cars spent over 2K total. Exactly. It's exactly right. So it's just crazy stuff. All right, here we go. Let's go currencies. DXY, gold, silver. I'll talk about that. Dollar index. I still think we're range bound. I think this dollar could be like eerily sneaky. I mean, I've said this before. This is kind of repeat analysis, but right now we have interim levels right here. Either this 108 handle holds or this 105.50 level holds. Like 105.50 is my break to the downside. If we're not going to break that, if we're greater than 105.50, I'm still bullish on the dollar. Okay, 108 is a potential resistance point, but if that breaks through, we come all the way back up towards this 109 plus handle. We might hit a round number at 110. This is the surprising move. If we get all the way back to 114, that's a really surprising move. Okay, just look at it this way. This low, okay, and we took out all these highs. If this is in any way, shape, or form giving us some type of bullish pattern, don't be surprised if this market measures this move and gets us back up to this 113, 114 handle. As I said before, this is very disruptive in the Forex market. If we see another, let's say 700 points on the DXY, and that translates into pips, if you've got a 700 pip move on the euro, we're going back below parity. Right? If you've got a 700 pip move in the Aussie, New Zealand, you're going to be at like 15 to 20 year lows. We're going to go to like post-Brexit flash crash levels on the pound US dollar. If we get a 700 point move on the DXY, it's going to be crazy. The only thing that might be different and non-correlated might be the dollar yen because the BOJ does whatever they want. But if this happens, that would be extremely disruptive to the Forex market where, look, it's a flow that I wouldn't want to fight, but it would be ultimately a fantastic way to then have some short-term strength in the dollar. You can ride that thing out as long as necessary. And then if we find a topping pattern, short the living heck out of the dollar and make a fortune. And that's usually how I trade. It's like, I might not get this area where I'm super aggressive and active because I don't like it. But if we start trading into open space where this is a big resistance level and we've taken out and we swept all these recent highs, if all this is a buildup and another accumulation zone for this dollar to go higher, okay, we could turn this into like a 3-wave move. This could be 1, 2, 3, 4, 5. This could be a 5-wave move to finish this thing out. I don't know. But when this is done, I'm looking at probably an easy ABC correction, sell the heck out of the dollar, make a fortune. If we get a 3-wave move, there's going to be plenty of opportunity to be long the dollar if it's proving to get, looking to build off of like 105.50. If we find support at 105.50 multiple times, you can stack up your breakouts. You can get proven to be right and then see price go up. But don't be surprised to see dollar strength. Just saying. Okay. Have you noticed that the yen? I mean, yeah, but who cares? I mean, does anybody trade the yen and make money? So, I mean, these last couple of weeks, I mean, here's the best way I trade the yen. This is the only trade I'm going to take in the Japanese yen. I'm not touching the currency market for the Japanese yen. I will take defined risk all day, and I'll trade it in the Japanese yen futures. So if we come back down into these lows, I will be looking at a long position on Japanese yen futures, right? And why would I do that? Because I can do defined risk trades. Here's what I like about it. If I trade options on Japanese yen futures, I can get in around this area where I would say technically I'd like to be in. And this Japanese yen can get super weak or it can get super strong. I can define my dollars and percents here and take a trade. This is way better for me than trading the Forex market, because the Forex market will test these highs and lows and it's going to run these liquidity levels and it's going to be super messy. It's going to take months and months to play out and eventually you get a move. But if you get beat up and you can't survive that, you're going to get your butt kicked. So I can place a trade with no stop loss. I could just trade defined risk options, and this thing can go down to zero, and the Bank of Japan can have a currency that goes to zero. Or this thing can go up and be the strongest currency pair in the world, and I'm only going to risk the same dollar and percent that I put on the trade originally. I am totally fine with that. So I get the ability to truly define my risk, and this asset can be way off, price-wise higher, price-wise lower, and I'm not risking any more than what I predetermine in the trade. So that is the only trade that I'm interested in on the Japanese yen. It's going to be a futures trade. And if it comes back down to these levels where we saw some deleveraging back in July and August, then I'll take another stab at it. Right. And what's my timeline? I probably go out 6 to 12 months and hope that I'm right, you know, and maybe I can say 3 to 6 months and try to be right there. I also, I mean, if there's if I could trade like micro Japanese yen futures, which I don't know if there is that. Let me see if there is a micro Japanese yen. I don't think there is. MNQ, no, that's not it. 6J, I don't think there is. I don't think we have any micro currency futures. /MJ, nope. 6. Okay. Micro Aussie, micro pound, micro euro. Son of a bee. I don't have micro Japanese yen. Crap. So I've got micro Aussie, euro, and pound. That's fine. It's probably, I don't know. I was going to say, like, it would be a better trade for me to trade a micro Japanese yen and trade a long put. Or I'm sorry, trade a long call. And the most I can lose is what I pay for that. So if I paid, let's say $250, right? Here's an example. If I got in here for a defined risk of $250 and this thing went up like it did during that July, August volatility event, that would probably pay, I would say $2,000 or more. That type of move and that type of volatility, you would turn this into a monster winner. But if I do it defined risk, you know, then the expiration comes into play and I've got to time it out. But, you know, if I technically get a bottom, I'll be fine. I just wish there was a better way to trade that doesn't cost an arm and a leg. So if I did, I'm just going to look at it right now. If I just did /6J, okay, and I look at something, I'll just say March of 2025. If I buy an at the money put, if I buy an at the money, at the money call or one strike out, I mean, I've got to risk $1,500 on a futures contract. Now that's the most I can lose, but you know, can you see why I want to go define risk? Just like that, I can make $375 to risk $220, like my or $250 to make $375. Like automatically with defined risk, I can make it so, you know, maybe I get like 125, 130% return on capital. But now I have to play it out with like the timing has to be right. And that has always been like the hardest thing to do on the Japanese yen is time this crap. Because who knows? So we'll see. It is what it is. Could I trade this another way? Let's see. I could do a zebra, which would be super expensive. If I bought 2 contracts here and I sell a 50 delta right here. So the 6/6, I'm going to sell one of those. So this is essentially like being long the contract. I mean, I'm risking $4,000 on that trade. It's like, it's not worth it. I'm not taking that type of risk on the Japanese yen. So we'll see. Defined risk is probably the style. But to me, that's just way more flexibility than it would be if I just traded Forex. Because Forex, for the Japanese yen, my least favorite currency pair of all time, by far. All right, anything else? Let's go Swiss pairs. The Swiss cut rates, more than expected. I still like the positive swap. We're holding these levels on Aussie Swiss. I'm still holding long towards the 6,000 to 6,100 zone. CAD Swiss, we're hanging on those lows pretty nicely at 6,200, and hopefully we can get back through. I don't know. I mean, I still think that we may come back and revisit. We might revisit this flash crash low, which I would be interested in kind of buying. If this is a low and then a high and then a repeat of that low, this could be a double bottom that gets me back up to the center high. There's also a really nice pocket trade in here. So I'd have two big inefficiencies that I would be trading towards. So if I bought this thing around 6,000, okay, and I'm still going to hold this trade. I'm still long CAD Swiss. I've been long this thing since like 2023. I will hold this. And if I buy back in more at 6,000 and I add more to the upside and I get this thing back to a center high, that's a big winner. But also if I get that double bottom to play out, that's a massive winner. And it's just a technical trade. But a double bottom is this. We have a low, a center high. We'd have a double bottom here. You get back to the same center high, and then you double that move. There is so much reward to risk, right? You have all this potential profit for this tiny little risk right here. But yes, it's going to get messier, and it might come back and give you a bigger drawdown. But if the level holds in its support, then you've got a fantastic trade to the upside. Euro Swiss looking better. That turned nicely off this 9,200 support. I'm holding this thing towards 99. I'm trying to get this thing all the way back up towards 1.00, but I would be happy here. We come back to this high, I'm happy. I'll make some money there. This structure is holding nicely. And if we break out of that, I think there's open space to get to 99. So another big position trade for me is going to be, I've held this Euro Swiss for a while. If I hold all this support and it finally breaks out structurally, it's really this simple. If the daily time frame on the Euro Swiss gets above the 200 moving average and we're holding these levels, don't be surprised to stack up some orders and see this thing hit 9,900 again. That's a big profit level. Could it go higher? Sure, maybe. 1.00 would be awesome, but I also see where price has been. I'm not trying to be greedy. So I'm going to hold on to that one and see if we hit 9,900. Pound Swiss, it's finally showing signs of a potential breakout. I hope that it does. If we measure a move up here, I'm trying to get back to 1,600 as step one, and then trying to get back to 19 to 1950 step two. This is my final target right in here. Around 1,900 to 1,950 is where I will be satisfied on my Pound Swiss. Positive swap. I'm going to hang on to it. Okay, New Zealand Swiss, also a little bit beat up, similar to the Aussie Swiss. Maybe it pulls back and finds a double bottom here around 5,000. But if we have some stacked orders here, trade goes higher, find me some 5,600. I still think 6,000. There's a nice level all the way up here towards 6,000. That could be wishful thinking. If we come all the way back down to revisit the flash crash, that to me is a double bottom potential. There's a center high. Measure the move up there. That's target one. Measure that move there, target two. Big opportunities, but my gosh, I can't imagine that this trade that I think has pretty good technicals has taken, almost 2+ years to fulfill. So if I go into 2025, I've literally been in these trades since 2023, right? Like, is it frustrating? Like, yeah, we haven't had really the technical movement, but at the same time, it's like, well, I mean, I'm getting positive swap. I don't know what else to say. It's like my drawdowns are very manageable. My swap is covered a lot of that. So I mean, I'm just waiting. And I'm sitting on like hundreds of thousands of dollars in profit. That's just, if it pays out, it'll be an awesome trade, but it is taking a lot of time. So I'm extremely patient, and hopefully that patience ends up benefiting. Okay, dollar Swiss looking better. My dollar Swiss, I'm trying to get this one up to 92. I'm looking to cash in on 25+ positions. That's it. Like, I'm letting it drift at this point. We get up to these highs. I'm taking profit at 92. If it goes higher, there's still a huge pocket up here, but I'm not going to be greedy. All this is range bound for me. So if we hit 92, I'm happy. Okay, that's all my Swiss pairs. Yen pairs, I could care less. I'll trade Japanese yen futures. Looks like some other currency pairs. Aussie CAD, I'm still long. Aussie New Zealand, I'm still long. Aussie dollar, I'm still dollar cost averaging in. I'm taking some small stabs on the dollar or the Aussie dollar. Let's see here. No yen crosses. Swiss yen, that's the only one I'm holding right now. It's break even. Euro yen, nothing. Euro Aussie. I don't know. I mean, I missed the trade. The trade on Euro Aussie was down here. I'm not that interested. There is potentially a trade up into this resistance. I just don't know if we're going to go. This could be a range. Like, just be careful. This could be a range. Okay. If we see a weaker Aussie, and your proxy would be Aussie dollar. If the Aussie dollar keeps going down, then this Euro Aussie, might keep drifting, but I'm not chasing that thing. So I don't like it. I'm not doing anything on it. EuroCAD, I'm not going to do anything with this outside of maybe an opportunity to fade this high right there. So if we come all the way back to 5,200 and we respond to that resistance again, I would look for a short opportunity with a tight stop loss. That's about the only trade I see on EuroCAD that I like. Otherwise, I'm out. I didn't buy this, nasty dip. We came right back down. I didn't get a chance to short it really. It's like I never had a pullback that I wanted, so I'm not doing anything in EuroCAD. Euro pound right now, I'm still long, but I don't know. Just hang on to this a little bit longer. Euro New Zealand, similar to Euro Aussie, possibly has room to get back into the 8,500 zone before we can top out. I'm not chasing this up. I would just be waiting for price to see if we hit resistance. We hit resistance for a sell. We hit resistance and top out for a sell. That is a 78 to 80. I mean, that's almost 1,000 pip range. And I thought for a second when we were actually heading lower that we could get back down. This is a much more attractive buy level for me, right? 76 to 75 was a great spot to buy support. We just didn't get it. So now it's like 84 to 86 looking for resistance and see if that's a sell spot. In the middle, either trade what you see and follow the trend or wait for highs and lows to hit and, buy low, sell high. Euro dollar, I wouldn't touch this thing at 105. I don't think that level is firm enough to hold. I really don't. So I looked at this as an opportunity to sell more. Want to take this into parity or lower. I could see the dollar index getting stronger. I could see the euro dollar as mainly the correlation getting weaker. But I will say that if this runs to parity or runs back into the 90s, like we had a 96 low, I wouldn't necessarily buy it at parity, but I would say if we crack parity, I'm interested in small trade at parity, maybe a 9,800 and a 9,600 trades 2 and 3. I would dollar cost average in on the euro dollar at 20, 30-year lows and see, okay, did the dollar have enough fun? We go from 112 all the way down to 95. I could see the market responding to that in some degree. But at this point, I mean, I still think short is fine. There might be some manipulation here, so be careful, but just watch the structure. And if we break and go lower, dollar strength probably prevails and we're maybe revisiting parity again. So it's a trade. But to me, am I going to trade the noise in here? Probably not. I'm honestly probably just going to wait for parity and dollar cost average in, get some small trades in, and then stack my orders back up and take this thing to 105. And that's where I make all my money. I test, let's say 1 to 3 levels here, and then I stack, let's say 3 to 5 levels here, and that's where my money is made when we get back to 104, 105. That's my trade. So I don't care what the euro dollar does. I just want it to come to a level that I'm more interested in trading with oversold conditions and divergence, and I can buy low and then take this thing with a big liquidity hunt. Pound Aussie, pound CAD, probably similar. Pound Aussie still going higher. You're either following the trend, you're not. I wouldn't fight that. Pound CAD has also revisited recent highs. I'm not fighting that thing. Don't fight it. Right now, look, it's at the end of the year too. Don't call tops and bottoms on these markets. Okay. What is in motion stays in motion. Don't call tops and bottoms in the currency market. What's already established is probably still going. Okay. Pound New Zealand's, we're moving up the highs. Like, don't fight this thing. So I'm not trading it. I've got nothing on it. I'm just either following along or not. Pound dollar, I got out for a small loss, and we'll see what happens. Pound dollar is definitely vulnerable below 2,600. We get below 2,600, we could quickly go to 2,000. If we hold here, I still don't know if that's enough to maintain pound strength. I don't know how the dollar would turn, to be bearish and the pound's like coming out ahead. Outside of the fact that the BOE is maybe holding rates higher, but I don't think the carry trade matters that much. If the dollar gets stronger, this thing's probably going lower. So it's vulnerable. I got out on this little retracement. We came back to the 200. I took a small loss on that for like 30 pips, right? But if we break below 26, we probably have room to get to 2,000. Okay, that's also a nice, like, big psychological number, as is 3,000. So I would wait and see if we break 26 into the new year and then maybe have a good trade to the downside. Okay, New Zealand CAD, I'm still holding long to get back towards 87 to 8,800. New Zealand Swiss, I'm long. New Zealand dollar, I've got a couple of scaling levels on New Zealand dollar. Small right now, testing levels, and I'll wait. So if we come back in and test, we hold this multi-year support, we get back into this level, I can take a break even and then a win and then a win. Those are supposed to be W's. So I could win one, win two, take a break even on this one. If I want to hold it a little bit longer, I just go from this high to this low, take the midpoint, and then say that's a profit target, right? Market's been responding to that level multiple times. It could do that again from support. So maybe we can get back to 6,000 as a profit target, which gives me, 3 winners on these small orders. But on top of that, if I like the trade enough to get a bounce, I could also stack these back up to the upside and try to get to 6,000 and turn it into a bigger winner. But I'll wait. Okay, dollar CAD, I'm still long. We're trading at 43.15. I did finally get taken in on that final stack in order. I have added in, so 1, 2, 3, 42 is filled. I stacked in at 42, 42.50, and 43. So I now have 1, 2, 3, 4, 5. I have 7 orders in. I have 7 orders in. If we get to 44.50 to 45, I'm taking profit, and I'm good on that. So dollar CAD is doing what I said. We've got a multi-year breakout. We broke above that 39.50 to 4,000. Don't fight it. There's not even a pullback. If it pulls back, so be it. I'm still buying this thing. This is going to go back up to at least a measured move at 44.50, I think, and trying to get back to these recent highs in 2016 to 2020, 4,600. So if I want to be greedy, then yeah, I'd like to hold on to this at 4,600. But what I'm doing instead is I'm being conservative. There's my measured move. There's my projected symmetry. I'll take my profit before that gets hit. Okay. How did you know dollar CAD was breaking above 139? Well, if you look at price, this was resistance. This was resistance. And what did price do? It kept going higher and higher and higher, and there was no sign of stalling, and it broke above 140. So how do I know it broke above 139? Price was at 140. That's a pretty easy indication. Price was way above the resistance. Okay. And it went all the way up here to 141. I'm like, that is not a fake out trade, right? This is in the heart of Q3, Q4. This is during a trending window, and CAD's weaker, dollar stronger. I just thought fundamentally, and also oil's been just sitting here like getting beat up like crazy. So, oil's not getting any love, CAD's not getting any love. Bank of Canada was way more dovish, and it was a pretty easy trade to see it broke, 50 to 100 pips above my resistance zone, and I just stayed with it. So that's why I'm long. And hopefully we're, talking profits here at 44.50 to 45. I might end up moving this up a little bit. But like I said, I'd be happy enough just taking profit for another, I don't know, maybe another 120, 130 pips. It's a good trade. Okay. All right. Dollar Swiss, I'm still long, trying to take this one up towards 92. Dollar yen, who cares? Okay. So, all right. Covered all the currencies, covered dollar, oil, gold, silver, cover the markets. Here's where we are for the week. We're right in the middle. You've got highs from 3 weeks ago. You got lows from 3 weeks ago. This market's sitting right in the middle as we approach FOMC tomorrow. Don't be surprised if the Fed, with tomorrow's price action, is sitting right in here. That 6,100, that 6,000 on the SPX, or the 610 to 600 on the SPY. Look, tomorrow's FOMC, everybody knows the rate's going to get cut. The Fed has been so transparent that CME Watch tool is spot on. The probability is like 90+% the Fed's going to cut. What they say, does the market care? Is the market going to care enough to react to it tomorrow? I don't know. I would say that if Powell wants to set the market in motion for another all-time high, then the Fed will do it, right? And the Fed doesn't necessarily do it, but it's like the market's just like, okay, we get it. We'll wait, and then we'll surge, right? Like the market is just waiting for the Fed to be a catalyst to then drive the market up higher. That's very possible. If the Fed says something that the market doesn't like, then perhaps we get a, breakdown below 6,000 on the SPY, or I should say 6,000 on the SPX, or 600 on the SPY. Something tells me that the market's not really going to care. It's trying to get every ounce of gains that it possibly can. And if it does, then we're going to hit, 59 all-time highs for the year, maybe 60 all-time highs for the year. Maybe the Qs hit some new fresh all-time highs as well, and enjoy the melt up while it lasts. So Am I bearish going into Q1? No, I'm not, but I am hedging just in case. Okay. So it's pretty simple. Either tomorrow's Fed is really noisy and nothing really happens, and we stay sideways for the holidays, or the market's able to just kind of eke out these tiny little slivers higher, and everyone's just like all-time highs, baby, all-time highs. It's fine. So if I were to put a probability on it, either sideways or up is probably the higher probability. Path of least resistance is likely the thing. Okay. The only real derailment that I have is if the Fed really acknowledges inflation tomorrow and they talk about a reason to be satisfied with the current amount of cuts and being very cautious moving forward because they've seen higher inflation data. That might be the only thing that maybe gets the market like, wait, what? Wait, huh? It's not up, not all-time highs, but I would see sideways to higher as the bigger probability. Unlikely we go down. At this point of the year with thin volume, unlikely to have like a big nasty correction. I mean, it happened in 2018, end of the year. Unlikely though, So I would say either sideways or higher, watch price. If we're greater than 6,100, if we're greater in the SPY than 610, melt ups. The previous all-time high was 609 and change. We get to 610, that's a new all-time high. That's 58 for the year. If we drift up through Christmas and New Year's, we get 59, 60, 61 all-time highs. Enjoy it. Okay. All right. Yeah, I know. The Fed is going to cut. It does not guarantee anything. It is either an excuse for the market to be noisy, an excuse for the market to do the same thing it's been doing for the last several months. But I think the higher probability is we're going either sideways or up as opposed to a full-on correction. I don't think the correction comes the last 2 weeks of the year. I mean, you go into the calendar, it's like Christmas Eve, Christmas Day, limited trading, New Year's Eve, New Year's Day, limited trading. That would be a huge surprise to the market if we're going to have a big, 3, 5, 7% correction last 2 weeks of the trading year. Unlikely. So just be expecting noise tomorrow. And then as the dust settles, here's what I would say. Here's what I wouldn't mind. I wouldn't mind this. Come down in and test 6,000 on the SPX or 600 on the SPY and put in a bull call spread and trade this thing up to the rest of the year, right? Just use structure, find a low there. The market holds 600 and then goes all the way back up to the highs. Easy income trade. And you get a little bit more of the melt up. If we go to higher highs, awesome. But I'm still looking at the major level support. I think we're going to find it, or the market's going to go either sideways and be noisy, or it's going to drift up higher. There's still order flows going into the markets, right? Everyone's buying Mag 7. There's a lot of money in the markets. There's a lot of money out there that's being added into it. There's been a big pump post-election. Everyone's optimistic about 2025. So, am I overly cautious? No, not overly cautious, but I'm just ready for a little reality, but I want to be buying. Like, that's the thing is like, I'm just waiting to see, like, can I get a dip to buy? That's all I'm waiting for. And so I'm like a little cautious going into like, I hope we have a pullback, because if we don't, okay, fine. But if we have a pullback, it's good. Okay. But most likely path of least resistance is probably going to be the winner. So I would not be surprised if I get a trade this week. It's going to be bounce, looking for longs, and I could look for a bounce on the SPY, bounce on the SPX. I could do bull call spreads to make it risk defined, and try to get an income trading by the rest of the year. If we get to all-time highs, I've got some of my strategies that are also going to be, generating some profit there. That'd be another like 4 winners probably. And that's it. And what I'll end up losing on are hedges. But I've got hedges out to December 31st. I've got hedges right now out to the 31st of January. And as we roll into the new year, I'll probably put hedges out to the end of February, and then the end of March, and then the end of April. And I will keep doing this like a fool. And eventually I'll, maybe have it pay me. But all this is if I can get, let's say 2 to 3% gain on the upside while sacrificing 0.25%, I'm okay with that. Like, that's my insurance cost. If auto insurance is 61% more expensive than it was, I can afford to pay 0.25% in portfolio insurance. How's that? Okay. All right. Let's go for today. Let's see here. Tomorrow should be good for tomorrow. Tomorrow should be good in the morning for the typical A1 trading session. And then I should be joining Nick and maybe Nick and Frank if we're doing an FOMC session around 1:30. and we'll see where the fireworks get us going into 2 o'clock with the rate decision. But it is expected to be a rate cut. It's pretty much been priced in. We're at 95+%. This is transparency. This thing has not been wrong since 2009, so pretty reliable. And we'll see. Just keep in mind on Wednesday, FOMC rate cuts expected. Watch the U.S. 10-year yield. And then also on Friday with PCE, is the year over year higher and hotter? If it is, it's clearly 3 months of data that is showing higher inflation. The Fed can't just freaking ignore it. Okay. And going into 2025, it would give the market reason to believe like the Fed is not going to be as crazy dovish. It's already pulled back on like 40 to 60 basis points of cuts in 2025. I think the market might be lucky to get 2 cuts next year. That cut is probably not coming in January. That's going to be maybe a March and July. I don't know. We'll see. But Q1 is going to be an important kind of inflation quarter for the U.S. because if we have tariffs hitting in Q1, that's probably not a good thing. PMI numbers are up. We get a bigger announcement from China in March of 2025. That's more inflationary as well. So we'll see. Right? All right. That's it. Stay frosty. All right. See you, everybody. Have a good day. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.